Shall we start? Okay, so just before we do, please let me know if you have any questions regarding what we learned yesterday. Actually, not only with me, also with Danny. So if there's anything, just anything you think we should repeat, anything that you feel like you didn't really get enough, or you think we should repeat. I mean, I'm going to repeat a lot of things anyway. So we're going to be doing some of the orders. I'm going to repeat some of the orders that we learned yesterday with Danny. And then later, market is going to be closed and we'll get into some more trading materials. Okay, so I guess we can start. Well, let's start with screen sharing. Good. So you should be seeing my charts now. And what I want to go through is everything that has to do with orders. I think it's one of the most important things in trading to be aware of all the orders and to really realize what exactly you're supposed to be doing anytime. So this is quite important, and I want to go through this. Okay, so firstly, just picking a stock, whatever, it doesn't really matter. In this case, it's SSYS, and we have here the stock box. And in the stock box, it's a demo account. By the way, it's a demo account, so I'm going to be demonstrating some trades today. I don't want to do it with a live account. So it is my demo account that I'll be trading today. And as you can see, SSYS is up today. Volume is kind of okay, 800,000 shares. It's a little bit over our minimum. It's quite good because, as you can see, the spread is relatively low. And again, we discussed that yesterday. This is the bid. This is the ask. Here we can see the sellers. Here we can see the buyers. We can see the quantity of the buyers. We can see the quantity of the sellers. We did mention yesterday level 2, or you did with Danny, but we didn't really get to it. But let's just start really with the basics. Well, the basic thing is, first you need to define or to set up your platform in a way that it really is according to the number of shares that you're trading. For me, for example, my default, if I click the D button over here, is 4,000 share and market. If I'll move to limit and 2,000 shares, for example, then I could return to my default by clicking the D button. So did you, by the way, go through this, for example, this button yesterday with Danny? Or is this something new that we're learning right now? Did you go over this? For you, it's new? Okay. Okay. Okay, I have to go through, I will go through many of the buttons here and things that you're supposed to be using and how you're supposed to be using them. First, if you need to set up your platform, you need first to set up the default. And excuse me if I'm, a little bit rusty on this because I don't do it every day, but I'll manage to do that, no problem. I would go to config and set up default order. And in default order, for you guys right now, I will set it to 400 shares. And I will set it here also for 400 shares. I will pick my account number. This is, of course, the demo account number right now. Well, sometimes when you do that, it jumps back to limit. You saw that? Many times it happened to me and I didn't really realize why it happened. But anyway, just return it to market, and that's it. So I've got 400 shares, market, and then I click on the OK button, and then my default changes to 400 shares, and the order, of course, is market. Now, I'm teaching this based on the Colmex platform, but almost every platform that you'll be trading is almost the same. It's not exactly the same, it's almost the same. So the buttons will not be exactly like this. The name of the button may not be config or whatever, but you'll be doing approximately the same thing with different type of platform. So mainly it's quite the same idea. Okay, so let's go through this. So firstly, I did set up my default, which is very important because wherever I want to return to my default, it's just one click of a button D and I'm back to market order 400 shares. Okay, now there's some basic setup too. For example, I trade CFDs, therefore my route is CFD. If you trade stocks, you need to pick a different route. There are several different routes in stocks. We'll not get to this right now, but you need to pick your route. Here I have my account number. If I had more than one account number, I could pick my second account number. Assuming you're trading your one account and you connected to the same account another account, I don't know, you're trading for other person or something, or you have an investment account and a day trading account, you can in fact connect a few accounts to the same platform. I never done this myself really, because I always work on two different computers, but some people do, so you can pick a different account number when you're doing that. And then there's several of other options here, which we will discuss later. Here you use the symbol. Now, as you can see, the color here is connected, meaning if I change the color here, then it has to be the same as the color in here. And once you've done that, hold on, this disappeared. Once you've done that, then every symbol that you'll be entering here is going to jump on your chart just like that. So right now this is interconnected. I also connect my time and sale. So usually when I use my platform, these three are connected. So I would choose the same color in my stock box, in my time and sale, and in my chart. So if I'm just going to change one of them, let's say C for Citigroup, then they both change. So here comes C with all the level 2 data and all the information here. The time and sale jumps up and my charts are for Citigroup. So these three are always interconnected. I do add to that my trade manager and my account manager. So if I have open orders here, or if I have positions or whatever, then I don't have right now, but if I'll click a position that I have in here, it's also going to jump to the stock box and to the chart. That will make it very easy for me to in fact watch them. So I do that. I also, depending on how many charts I have, I sometimes connect my top 20 also. But in this case, my top 20 is connected to this chart. So if I'm going to click any of these, as you can see, the top 20 is connected to this chart, which is on the right side. Therefore, I do not connect it to this chart specifically. So that all depends on how comfortable you are with your setup. How would you like to set your own screens, and what works out for you specifically. There are some basic setups in the platform. In every platform that you'll be trading, there are some basic setups. So you can, in fact, open file, open screen, and as you can see here, I have different setups when I'm trading stocks, or when I'm doing this or that. Even if I'm writing an article to the newspaper, I actually have these setups, which sometimes I just take out a different setup which is comfortable for me, just to copy a chart or do something like that. So this was just basic stuff. Now I want to get with you into trading, into orders, and actually liked SSYS, which I've seen earlier. Yeah, it's uptrending, so it kind of look okay. And let's go into the basic stuff. Okay. The first thing, as you know, that once we're trading, we're usually looking for what we call the trigger. So the trigger in this case in SSYS is right, let's assume it's right over here. Okay, so it's uptrending, nice reversal point. I would like to buy it once it reaches this area. So I would like to buy it, let's say, at 1890. Once it reaches 1890, I want to buy SSYS. So how in fact do I do that? One way of doing that is waiting for SSYS to reach 1890 right over here, and then just get ready with my quantity. Let's assume I want to trade 400 shares, okay? In my case, CFDs. Let's assume I want to trade 400 shares. I want to get in at 1890, so in fact I'm going to be watching the price here moving to 1890. There are several ways of doing that. One way is to watch the chart and to see it gets to 1890, but in fact most of the time I don't even watch the chart. Most of the time I watch the level 2 here, because I'm more interested to see the price here reaching 1890. So let's assume I'm going to see the price right here at the seller side reaching 1890. Does that mean that there was actual trade in 1890? No, not really. I could take a look at my time and sale to see if it was traded at 1890, or actually watch the chart and see that it was traded at 1890. But sometime I want to get in at 1890, but I would see, let's say, just 100 shares for sale. Right now 5 means 500, 1 means 100. Let's assume I see a very small quantity of sellers at 1890. Therefore, everything may be changing. I may decide I want to move at 1890 or a cent below that, also depending on the volume, depending on how it look, how the chart looks, depending on the volatility, depending on a lot of other things. But again, we're discussing orders here, and I'm not really supposed to be talking to you about strategies, but orders come with strategies. Therefore, we will be discussing strategies too. So if I want to move into SSYS, I could, with one click of a button, move in right now. Now, if I want to make sure that I'm getting, now depending on, of course, how fast I want to move in, or how fast I want to move in, or how fast I want to move out. So right now, my standard order is market. If the stock is kind of quiet, as you can see it right now, there's no reason for me to get in with market order. There's no reason for me to get in with market orders. So I would be, let me show you how it looks on the account manager, okay? Here's the account manager. So at this time, I have plenty of time to pick a limit order and not to pick a market order. The problem with the difference between market order and limit order is that if I pick a limit order like that, okay, then I can pick the price which is here. Now notice what I'm doing. I'm clicking 1883 right now. Click, I just did. And then you can see the price over here. Did you notice I don't have to write down the price here? I just click the price. If I want to use a limit of 1884, I will click, you see here, 1884, click, and notice the price just changed. 1890, it just changed to 1890. Let's say I want to short it, 1880, click here, I can short it at 1880. So that's rather quick to move to a limit order. I want to return fast to market order. What do I do? Give me an idea. What am I supposed to do? What would be the fastest way to move to a market order right now? Absolutely. Use the default. I could do that, okay? I could do that, move to market order. Right now, let's say I'm at limit. But the fastest way, which I would use really, is just click on the default button and then move back to market. But beware, the default also may change the number of shares. If my standard is 400 shares, I'm fine with this. I don't have a problem. Okay, but this may change that too. Now, if the stock is relatively quiet that way and I don't have to chase it and it's not a breakout point where it's going to run away from me or something like that, therefore I do have the time to use a limit order. Therefore, I will click excuse me, here on 1883. Just click on 1883, it's just 100 shares for sale, and I'll click buy. Now, as you can see, since I'm trading CFDs, I don't have any liquidity issue. Notice first of all how fast did I get executed. how fast I got executed. I just clicked that button buy and I got executed. Now I also got executed for 400 shares, even though there weren't 400 shares for sale. I think there was only 100 shares when I clicked the button. Okay. Now that is a limit order, and I would use a limit order if the stock is kind of quiet and I don't have to chase it. Therefore, in this case, I would use a limit order. So right now I'm long 400 shares at 1883. The buyers are at 1882. The last trade is at 1883. Therefore, it shows me that I'm not losing money, but in fact I am losing money, because you see, unrealized right now is at 0 because the last trade was at 1883. But if I want to move out right now, I can't move at 1883. I need to move at 1882. So in fact, I'm going to be losing 1 cent. Okay? I'm going to be losing. Last trade, 18.4, 86. Now I'm winning. Okay? So it's moving up. Okay, I'm glad I'm not losing money here. So I'm long 400 shares. I want to see how many shares I have. I'm going to click the P button. Okay, position. That's the position button. So the position button shows me how many shares I have. In this case, it's long. If I was short, it would show minus 400. Now, if I want to move out, I can use the default to move out, or I can click 86 here. The number is 400, that's what I have, and I would sell it. Now, as you've seen, there was only 100 shares for sale at 86. Even though there were only 100 shares for sale, I could sell 400 shares. Now, you can't really do that with a stock platform. You can only do that with a CFD platform because, again, there's unlimited liquidity for CFDs. Okay, so even though there was like just 1 cent, in this case, if I was trading a stock platform, I would lose 1 or 2 cents coming in, 1 or 2 cents coming out, because the liquidity wasn't perfect when I moved in, wasn't perfect when I moved out. By the way, if I want to buy 400 shares right now with the stock platform, I could, because there's 600 on the offer here, as you can see. If I want to sell 400 right now, I can't, because there's only 200 over here. So let me just give you a quick idea if you can trade CFDs, because not all of you can or want to trade CFDs. Just a quick idea, you were saving approximately 3 cents for every trade. This example that I just showed you was exactly 3 cents. I would lose a cent coming in, a cent coming out. The average would be something like 1.5 cents. So the average really is something like 3 cents when you're moving in or when you're moving out. We learned yesterday about CFDs, so you will find it in the recordings of B2B of what we did yesterday. But just to mention, CFDs are not stocks. CFDs are contracts for difference. They're like options. They're not the asset itself. It's not the stock itself. It's a contract. If you live outside the States, you can trade CFDs, and that means that you are not subject to market liquidity, which is again very, very important if you can do that. So, by the way, our funded accounts program is CFD platform. So there's if you trade CFDs with our funded accounts, and you're fine with that. If not, you just have to kind of pay the price. It's 3 cents total on average of every trade that you'll be making. So now things get a little bit more problematic, because if I want to trade 5,000 shares, just if I want to move in, it's like in my dreams. I can't move in with 5,000 shares. I just can't. Look at the number of sellers here. Actually, there's quite a bit of a seller here at 1890, so I could buy like 1,800 shares over here, like 2,000 maybe together, a little bit more than 2,000. But there's no way I could move in with 5,000 shares. Absolutely not at this number right here. Okay? So I would need to chase the price up a little bit if I want to move with 5,000 shares. But with 5,000 shares, limit order right here at 88 right now, click, I'm in. Look at that. It's a miracle. Seriously. Listen, guys. US traders, those who are familiar with stocks, would kill to trade this platform. Okay, they would kill to trade this platform. If you just seen I clicked 1888. There was just 100 shares for sale over here. I bought 5,000 shares at 1888. You would have to chase it. I don't know how many cents up if you want to get into 1888 this way, the way that I did right now. Not to mention the fact that if you want to move out, now I bought 1888, 5,000 shares. If I want to move out, how many buyers are? Well, something like right now 300, right? 500, 600. Okay, how can I move out with 5,000 shares? When you're trading regular stocks, you always need to do it in a certain way that is much, much slower. For example, if I have 500 shares, I would never dare sell more than approximately 400 to 600 shares. So what I would do, in fact, if I was trading stocks and not CFDs, I would see, okay, there's like 600 on the offer here, now less, so I can't even sell that. I don't want to drop this price down, so what I would do with a regular platform, stock platform, I would pick 200, 86, I would sell. Now I got rid of 200 shares. Because if I'm going to sell too many shares at the same time, what's going to happen is that the market makers over here are going to drop the price. They will do that. By the way, some of them do that automatically, some of them do it manually, but they would drop the price. So I never want to tease them with too much quantity. So right now, what? There's like 200, 400, 700, 800. Okay, default. Let's go to 500. I don't want to tease them too much. Gone. I can't do that anymore. Now I have to chase the price down a little bit more. Again, that's regular stock. There's plenty here. Okay, 84. I can still do that at 84. Okay, I got rid from another 400 shares. That was if I was trading shares, okay? Regular stocks. If I would do that with 1,000 shares, the market makers would kill me. Immediately they will drop down the price by 2 or 3 cents and I would have to start chasing the price down. But I trade CFDs and my position right now is 4,300 shares and there's only like 600 shares here on the offer right now at 85. Click, sell, done. Notice the execution speed, by the way. Now, if you do the calculation correctly, guys, you may be saving hundreds. For a trader like me, it's hundreds of dollars a day. A day. Hundreds of dollars a day. Okay? Now, for you, it may be several dollars, tens of dollars, I don't know, 20, $30, but still is a lot of money. So if you can save approximately 3 cents on every trade that you can actually make, then why not do that? You couldn't really buy 1 billion shares, Greg, because then when I say unlimited quantity, I mean like in normal people's numbers, okay? You saw me do that in 5,000, you can see me doing it in 10,000. The problem with CFDs is the fact that just like in regular stocks, there's market makers behind this. Your broker may be the market maker. There may be another market maker who's behind your broker. There may be, and some of them, one of them, or the broker or the one behind the broker, sometimes depending who, may want to hedge their trades or your trades and actually go to the market. So it depends on what is the positions you're taking. If you're taking large positions all the time, if you're not, it depends on a lot of different issues, but I could say 5,000 because really once you get to 5,000, I'm not there myself, once you get to 5,000, well, it will take some years. When you try to move from 5,000 to 10,000, you may have an issue, but they could do that. It only depends on the broker that you're working with, what's the liquidity, what the risk management of this broker, how does it look like, and there's several other factors. So no, you can't go with billions, but with thousands or even sometimes with tens of thousands, you're not supposed to be having a problem. Market maker cannot see CFD trade, that's correct. And does not register on the time and sale. That's absolutely correct, Nicholas. My trades do not show on the time and sale. The time and sale is very important for me as a trader in order to see the volume running, to see The colors here, we'll discuss that sometime. Everything is very important for me on the time and sale, but the market maker cannot see your orders. And this is absolutely amazingly good, because if they cannot see your order, they cannot drop or raise the bid and the ask, just like they do in the regular market. Now, when I was trading stocks again, and I was trading stock until like 3 or 4 years ago, then a lot of my strategies were based on the fact that I knew that there's going to be some hustlers, I would say, but it's more like market makers, and it's really is allowed. So it's going to be something that is allowed to be done. By the way, there's something not too rare, but it happens a lot of time. You see that the sellers at 88 and the buyers at 88. You see that? It's the same number. And right now you see the sellers, okay, it disappeared. Right now it's normal, 88 to 89. But you could have seen it earlier. There was even 89 here to 88. This is what we call bad prints. It's not the problem of the broker. It's really something that comes from the market. So it's something that is, the broker actually takes it out automatically when they see that. It takes them sometimes, but basically it's what we call bad prints. It has nothing to do with the broker, but you could have seen that. Anyway, so I would, if the stock is moving slowly the way it's moving right now, I don't have any issue other than clicking limit here. But then I have to set up the number of shares here. I can do that with one click over here. Let's say 1000 shares. And I could set up these buttons the way I like to. Like if I right click it, then these windows open up, and I could pick different type of buttons. Can't really remember how. Okay, yeah, you can choose a buy button, default button. There's several things you can choose here. You can even set up a button to sell half of your position, to do this, to do that. I usually use it in order to just show the number of shares that I want to trade, but for me they are set up with numbers, but you can in fact do it whichever way you like. Any questions which I missed? While some of the time and sale shares showing F0. Okay, the 0 is, it depends on the broker. 0 is less than 100 shares. 0 means, I don't know, 20 shares, 10 shares, 50 shares, whatever. Whatever is less than 100 shares is something that you're going to see here. Okay? Hold on a second, just to write something. Yep, I'm okay. Just please, one more second. Yep. So, yeah, that's the 0. Anything else I missed? No. Okay, so again, limit order if everything is very, very slow. Market order is my usual order, and this time it's set for default 400 shares. If I'm going to click market order right now, then I've got it at 86, as you can see here. That's the seller part. That's the market price right now, and I've got 400 shares. Why am I losing 4? Oh yeah, my total. No, I was for a second there I thought there's something wrong with the platform, but earlier on my experiments I lost $141, and I was just wondering how come I'm losing $141 just when I click the button. No, I'm not. I'm actually losing $1.40, as you can see, or $4 right now, because I bought it at 86, I could sell it at 80 right now, but earlier when we played around a little bit I lost a little bit more than that. So I just clicked the button. There were plenty of sellers. That was a market order. Market orders, of course, are the fastest orders. And if I want to chase a stock, I would usually use a market order because it's more important for me. It's more important for me to get in a stock than the price which I'm getting the stock. So in fact, I'm even ready to lose some cents when I'm getting in or out due to the fact that I'm using market. than to lose the trade itself. So if I'm using a limit order, let's say I would like to go long here at 82, okay? Let's first, just sell what I have here. So I have SSYS 400 shares, my position is 400 shares. I've got a limit order right now, I'm clicking that, I'm selling, I'm out, okay? So let's assume I want to, short SSYS right now. I could click 80, position nothing, default 400. Again, notice it tends to market. I could keep the market or move to a limit order, still 400 shares. If I'm clicking limit order and I'm getting ready to short it, let's say below 80, I want to short it if it moves under 80. So usually I would put it down like 3 cents below, get ready for it to move under 80 and click the short button. This way I'm going to short it once it moves under 1880. Okay, so I still have a limit of 77. That means I will be getting the price, worst case scenario, 1877 or whatever price is in this bid area over here. Okay, but that means that if it's going to move fast under this level, I may miss my trade. And in order not to miss my trade, in many times, most of the time, again, depending on the volatility, depending on the volume, depending on the way the market behaves and so on, I may use a market order again, default market, and just click short. But again, if I'm going to see that there is a chance that somehow, for some reason, the price is going to just break down. For example, let me show you this one, which is just about to happen soon, okay? This is AMAG. It may be a good example, even though the hour is not right for that, but as you can see, it's consolidating here near the lows, and if it's going to move under the lows, therefore it may move quite fast. It may move quite fast. Now, in order not to miss that trade, I could have, let's move it actually here. AMAG. Okay. AMAG, which I'm, by the way, still short. I don't know if you joined me on trading today, but that's a several point winner. I mean, we shorted it somewhere over here, I believe. 30.50? Yeah, 30.50. 30.50. Look at that. I'm still there. Only 50 shares, but I'm still there. Unbelievable. This is where we started today. Just unbelievable. Okay, so again, if I'm a little bit concerned that AMG will go under the lows, which is, by the way, 72, let's do it live. It's 22.72, okay? And I want to short it under the lows. I have two options right now. I could click 70, real quick here. You see, I saw 70 here. I want to short 400 shares. So if it moves under 72, I have a limit of 70. I would probably use a little bit lower than that because it's a fast mover. Let's say 65. I'm getting ready for it to move under 72. I'm watching the bid and the ask here. It's a bit spready, as you can see, like 5 cents. And I'm watching the time and sale here, which is also very important to see the trade itself. And I'm getting ready to short it under the lows, okay? Under 72. Now, the most important part, I don't watch the chart. Now, do you see the chart over here? I don't know if you're watching my trading videos. I bet most of the people that watching my trading videos are in fact watching the chart. Okay, I'm going to short it under 72. They're watching the chart. Wrong. You're not supposed to be watching the chart. You're supposed to be watching the level 2. This is where the action is. This is really where the action is, okay? You're supposed to be watching it here. You're supposed to be seeing the buyers, the bid moving under 72 right over here. You're supposed to be the trade conducted under 72 right over here. You're not supposed to be watching the chart at all. Okay, get used to these traders. You're supposed to be watching the bid, the ask. You're supposed to be watching the numbers that are right over here, and the time and sell. So I could do it with a limit order because I'm really concerned it's going to run very quick. Now, as you can see, it's a very big runner. For example, this small red candle here is has moved from 23.30 approximately to 22.70. So we're talking like this small candle here is 60 cents. Okay, this one, that's 60 cents. Okay, so it's a quick mover. Now, the same way it could give you a nice profit, the same way you could be losing money, or it could chase, or in fact, you could chase it down and lose the trade. If I don't want to lose the trade, I would use a market order, which means in this case my default order. Now, if you take a look at the volume is very nice. Look at the number of buyers, look at the number of sellers. So in fact, in this case, in AMAG, I don't really have any problem using a market order. In this case, using a market order is absolutely okay, because the number of the buyers, the number of the sellers. Notice the volume, 12 million shares today, 12 million shares. You don't really have a problem using a market order in this case, okay? Even though it's such a big mover, you can easily use a market order. If you use a limit order, there's a very good chance that you're going to miss this trade, okay? Questions, 2 of them. When you're looking on to short, on a breakout, do you wait for the ask and bid to get under? I only wait for, good question, Amir. I only wait for, if I'm looking for a short, let's say I want to short it under 95, I'm only looking here. If I'm going to see the bid, okay, under 95, I'm going to click the button, even if there weren't any trades under 95. I mean, usually, again, it depends on the volume. This one is very liquid. There's a lot of volume today. So if I'm going to see 90 here, there's going to be a trade. Okay, there's 90 right now. Okay, there's going to be a trade. Wait. There isn't yet. Okay, there isn't yet, but there's going to be. No, there isn't. Actually, the buyers just moved to 95, but there's still 90. But also one more thing that you need to notice. In this case, it's not a very good example, by the way, because in this case, there's a large number of buyers at 90. So what I would in fact do in this case, I would wait a little bit for the number of 90 to go down. So as you can see, there's a lot of buyers at 90. So again, in this case, I would wait for the number to be lowered. Like if I can see here that there are like, I don't know, like 3,000-4,000 shares for sale right now, I would wait at least for half of it to be sold, and then I would click the button. But yes, mainly I would watch this number here. Now again, this is also not a good example to what I try to describe, because the low is at 72. If the price here is going to show lower than 72, even 71, it's going to crash. Okay, so what I tried to show you earlier, which didn't really work, is going to work nicely if it comes to 72, because then if it moves a cent under 72, you are going to see trades at 72 really quick. Okay, you are going to see trade at 72 very quick, because it's a breakdown number, which is a different issue, because right now we're just moving in the range, so it's not really the same thing. But yes, I would definitely look at the bid. I would not be looking at the ask. The reason I do look at the ask is because I want to see the sellers moving down. I want to see this. I want to see some pressure. Now this is one. I guess this is one of the. I didn't notice this until today, by the way. Until now, really, when we traded it earlier, I didn't notice that. But it must be one of these 5-cent stocks. So they designated some stocks for 5 cents spread, whatever. Any other question? Do you sell short? Do you sell short? The same thing. There is no position off yet. No, sell and short are not the same thing. Sell and short, for example, I don't have any position right now. If I'm going to, let's say I have 400 shares, market order, okay? I click the sell button, nothing happened, okay? You see, no position to sell. That's what the platform told me right now. No position to sell. There are some platforms, however, I used to trade in one, I can't remember which one it was. There are some platforms which sell and short could do the same thing. I'm not for it because it could get you into trouble, but there are some platforms that do that. Because in fact, we're doing the same thing. We're doing the same thing. We're selling, we're shorting, we're doing the same thing. But it is a little bit of a mix to some people who don't really, who are not supposed to be doing that, or have some problem with that. It's really not a very comfortable thing. Yeah, it's a fixed 5 cents as I can see. How do you manage entering that kind of short with bigger spreads? And how do you know when to take the first profit and cut losses? Well, I will not talk about first profit and cut losses. It's not something that we discuss in this lesson right now. I mean, I could speak about this for an hour, but not right now. But with bigger spreads, that would again depend on. It's not just the spread. It's okay. It's how fast the stock is moving. So when I have bigger spreads than that, I would probably prefer to use a limit order. But then the limit, let's say I want to short it right now at 95, and let's say the spread is huge right now, and I really want to go into this trade. By the way, the target here should be $1. The stop loss maybe $1 too. So I could easily do something like that. Watch this. One click 80, second click 70. By the way, notice that these ones are for cents, okay? These ones are for tens of cents. It changes this number, this changes this number. Okay, so I just click down to 75. Let's say I want to short it under 95. In this case, I wouldn't mind using a limit order. Again, if there was a big spread and so on, I wouldn't mind using a limit order, but with an order with a limit of even 20 cents below my entry price, hoping of course that I'm going to get it as close as possible to 95, assuming I want to short it under 95, okay? Hoping that I would get it as close as possible to 95, but not really being certain that it's going to be very close to 95. But since my target is $1, my stop loss is $1 approximately, of course, therefore I would seriously consider using a limit order 20 cents lower than the price I would like to get in. When you sell short, you wait till it passes the whole number or the low, for example. Again, it's a thing for a different lesson, not for this one. But just to give you a quick answer, then again, it depends. Let's say $23 was my short. I want to short it under 23. I watch the number of sellers here, number of buyers here, and if I'm going to see the number dropping down, like maybe now getting close to the point where I would like to short it, I may short it even before it moves under 23, just because I see the numbers dropping down. So I may not wait for 95, even though I may use a limit of 95. Here we go. But I may try and get 23 if I can. That is depending on how many buyers I see here. But usually I would like to wait it to move under 23 or make sure that I think it's going to go under 23. Two different issues. Okay, so we were talking about the simplest orders really, which is really buy, sell, limit, and market. But let's get a little bit more complicated here. Okay, let's say we buy right now. We buy SSYS at 1888. Okay, click the buy button. I'm in. Now again, this is from previous trades. I'm losing money from previous trades. Demo trade that we did here. Right now I'm down $4. Now let's say my target is $19, okay? Or let's call it around $19. What, by the way, we learned that yesterday, what, by the way, would be the recommended price for me to sell the share? What would you recommend me to do? Which price would you recommend me? If, let's say it's around $19, please let me know. What would be my recommended sell price? Just below 19. 1999, 1998. Yeah, I mean, both of them are correct. 18, 8 or 9. 8 would be a little bit more secure to do that, I agree. 99 is also kind of okay, yes, but not the round number. Because the round number, you would expect a lot of sellers to come at round numbers, and you would expect the stock to bounce from round number. By the way, it didn't happen earlier, as you can see here, but it's not totally true, because if you watch it in real time, once you watch it in real time, it's going to behave a little bit differently. You may see that there's a lot of sellers at 19. Right now, I can see that what really happened in 19. So, okay, I am long right now, 400 shares, and I want to sell it at 18.99. So what exactly do I do? First of all, I click the position and I wait for the price to go up. Now, there are several ways of doing that. One of them is just waiting for the price to go up, get ready, and sell it. Now, can I sell it with a limit price of, let's say, 18.88? I want to say it at 18.9. Yes, sure, I can, because the best price that's going to be here is the price that I'm going to get. So it doesn't matter what the price is here as long as it's below 18.99, okay? So if I would just wait for the price to come close to that area over here and click the sell button, I'll be okay at the best bid price that there is here, okay? There's no problem to sell that way, but I need to wait until this price reaches 18.99 in that case, okay? So I could just wait, click the sell button. Do you have a better idea? Is there another option other than waiting? Stop limit? No, not in this case. A much simpler limit order, limit at the price. Absolutely. Not stop limit. I don't need a stop limit. I just need limit. Okay. I'm just going to change the number here to 18.99. There we go. Guys, 18.99. And what I'm going to do right now, and notice my order status over here, okay? Notice my order, my trade manager over here. These are the orders, okay? I want to sell at 18.99. Now let's say you don't trust yourself that much. You think you may be a little bit too slow. You do have your target. Your target is 18.99 and your stop loss is maybe something around here. Later we will learn that you really need to use a stop loss of 1-to-1 ratio minimum of your target. So let's say again, you try and sell over here and you want to have a stop loss over here. Okay, so I just put in the limit order right here, the price, which is 18.99, and what the simplest thing is going to happen right now. I own 400 shares of SSYS, and I'm just about to click the sell button. Here we go. Sell at 18. Always double check, by the way. Always double check your numbers, your orders. Always double check. Hit the sell button. I just click the sell button. I have an order to sell at 18.99. Why is this order not being executed right now? Because there's no buyers at 18.99. So the platform is not going to sell SSYS right now at 18.99 unless the price reaches 18.99. So in fact, I could just, walk away from my desk, wait for the price to get to 18.99, come back an hour later. Now we have to talk about the stop order also, but assuming I'm not afraid for the price to move down, I could come in later, and if the price hits 18.99, this limit order is going to be executed. Okay guys, it's the simplest order. Just put a limit order at 18.99, click the sell button. Now, what I did with the limit order of 18.99, I just told the platform, please sell at a limit of 18.99, not a cent below. Can it sell at this price? No, because the price is not there. So therefore, I do have a limit order to sell at 18.99. I wait. If the price reaches 18.99, it's automatically going to be sold at 18.99 because that was my limit. What happened if for some reason the price jumps over 18.99? It could happen, by the way. Quick announcement, something happened. All of a sudden, the buyers here jumps to $20. Really, seriously, I've seen that happening plenty of times. I wish in stocks I was trading, it's very rare, but just let's say something really good happens right now with SSYS and the bid price jumps to $20. I get a better execution. Absolutely true, Hyro. I would get a better execution, meaning whatever comes in the bid first, which is over 18.99, is going to be executed. Whatever comes better. The first price that comes here, since the order is at 18.99, is going to be executed. Now, if I want to cancel that order, I have two options. I can click the cancel button over here, or I could just click the X button, which was right over there. Okay, so I just cancel the order. I'm still long 400 shares of 18.99. Now, what happens if I want to, in fact, move out if it gets to, let's say, this area? So let's say my stop loss is at 1874, okay? Let's say that's my stop loss, 1874. Now, if I want to move out at 1874, do I have a quick order, like a limit order or something like that to move at 1874? Do you know of any order like that? Well, stop order, yeah, but it's not such a, I mean, the limit was the basics, right? I mean, we use limit or market orders. Now, obviously, I cannot use a market order, right? Because if I'm going to use a market order and I'm going to click right now sell, because I don't know, put 1894 or something and click sell, then it's going to be sold because it's a market order. Market order sells or buy at whatever price there is in the market right now. So I can't really use market order. I could use limit orders. What happens if I want to sell at a price that is lower? Then it's going to be sold right now. I could, for example, hold on a second here. I could, for example, use an order. Let's say I would use a limit order at 75, okay? At 1875. If I'm going to click sell right now, it will be sold at 82. Because I said I want to sell at 75, but if I'm going to click the sell button right now, it's going to be sold because I said I want to sell at a limit of 75. Platform says, great, I can sell it for you right now at 82. Click the button, you're out, no problem. Okay, so I can't use a limit order. The only order I can use is a stop order. So I'm going to set a stop order to sell at 1875, which is right over there. And this window has just opened right now. It wasn't open till I chose stop order. So if I use 1875, again, let's take a look at our trade manager over here. And I want to sell it at 1875. Again, that's an stop order. Again, check and recheck the number all the time. Is your position 400 shares? Yes, it is. Do you use stop order? Yes, it is. 1875. Yes, it's right over here. You know, I can't tell you how many times I did a mistake by even going $1 lower or $1 higher. Seriously, I've done that. Okay, like if it was like a stock at 120 and $18 or something like that, I could easily use an order $1 higher or $1 lower. Believe me, I did these mistakes. You did it today. Okay, I've did this mistake plenty of time. This is why whenever I use an order, I always read and read and read it again, sometimes more than once. Okay, it's 400 shares. Yes. It's a stop order. Right. It's 1875. Is 1875 really below or is it higher? Because if it was higher, it's going to be sold right now, right? No, it's 1875, it's below, fine. So now I'm long, so I need to use a sell order, and I'm going to click the sell, and now I have a sell order at 75, therefore if it moves to 75, I am out. Okay, I am out. So I do have a stop loss right now at 75 if it moves down. Now, is every stop really a stop loss? No, because sometimes I bought it here. Let's say I bought it here and I want to use a stop at 75. That's not really a stop loss order. That's a stop order, right? So some people mix in between stop loss and stop. It's not really the same. it's not really the same thing. I mean, the same function, but it's not the same idea, okay? So I use a stop or a stop loss order, doesn't really matter how you call it, but the fact is I just used an order to sell if it moves down to 75. So I had two ways of doing that. One way is to put a limit order to sell if it reaches my target. The second is to put a stop order if it moves down. Now, can I use both of them at the same time? Now, if I have a stop order right now, and I would try and use a limit order, another order, okay? Let's say right now, again, default, market, limit, move to limit. Let's say I want to sell at 99. I want to sell at 99. So can I actually use two orders right now? I do have one order to stop loss at 75. I want another order just in case it move up to 18.99. So I want it to be sold if it moves slower, and I want it to be sold if it moves higher. Can I put two different orders on the same trade? Let's try sell. No, please check the open order. Okay, so it tells me you can't use another order at the same time. You already have one order for SSYS. So it asks me to cancel that order if I want to use the second order. So the way to do that is by choosing the range order. Here's the range order. And the range order now opens two windows over there. One is the low price, which is 75. And the other one is the high price, which is 18.99. I can change both of them, of course. Now, in either case, I want the stock to be sold. Why I want it to be sold? Because I am long 400 shares of SSYS. I bought it for the long side. I'm long. If I was short, I would use a sell order, a buy order. But we'll go through this later. Right now, I am long 400 shares of SSYS. I want two choices. One, to move out at 75 here. Second, to move out at 89 over there. So everything I have to do is just put in the numbers here in this window, use the range order, and to click the sell button. Now I have one order, which is a dual order, which is an order to sell in both cases. One, if it moves to 89, second one, if it moves down to 75. So that order really takes care of both sides. It's a range order. What will happen if the stock really reaches 75 or reaches 89? In both cases, it's going to be sold, this time in a profit, this time in a loss. But what kind of an order? Well, the range order uses a market order. Okay? You have to know that. It uses a market order. Now again, if you're using CFDs, it's not such a problem. It's usually not a problem at all. But if you're using stocks, you need to be aware that once you use range orders, that also means that you may not get really the same price you wanted. Like I bet you I'm going to get 75 execution if I use CFDs. I mean, 99% of the time I will, again, depending on how fast it's going to come down and so on. But 99% of the time I'm going to get 75, and so would be my target price. Okay, so the range order is a market order. You need to know that. Okay, it's a market order. Now, let's cancel the range order and move to other orders. You have a question? Yes. Okay, so the range order is like a stop order on both ends, up until it triggers. Absolutely, it's like it stops it stops your trades, if you can call it this way. It stops your trades on both sides, either if it moves down or if it moves up. It moves you out of the trade. It's like a stop on both sides. That's correct. Okay, so that's the range order. Okay. What else do we have? Stop limit L trailing. You know what? I want to buy once more. I'm going to use a limit order to buy it here at 80 for 400 shares. I'm going to click the buy button. What happened? Oh yes, it's here. Oh, I already had it. Sorry. I was looking at this window. Okay, so now I'm the proud owner of 800 shares. Fine, no problem. I already have it. So I have 800 shares of SSYS. I just bought another 400 for the mistake, or whatever. It's a demo. And right now, I want to do something else. I don't want it to move under 75. So in this case, it's like 10 cents down, right? It's 10 cents down. So I would say something, I would use a different order right now. I want to allow it to continue moving higher and higher and higher and whatever, but I don't want it to move down to 70, to more than 75. Therefore, I would right now choose, by the way, always remember to click P position, because then you can put your order with the position that you have, right? Or you can do it later, it's not a problem. Now I will choose a trailing stop. I would choose the dollar sign. I will later explain about the percentage. I would use the dollar sign. I just used trailing with the dollar sign. And what I'm going to do here is put a trailing stop. And the trailing stop, I will explain later, is an order that chases the stock up or down. In this case, by $0.1. $0.1, okay, that means 10 cents. Right now, if I want my stop to be at 75, I would in fact need to use 0.09. Okay, that would be 10 cents, 9 cents. Let's use 10 cents. So 10 cents, trailing stop, 800 shares. Again, read the orders, read the orders, read the orders all the time. Read the numbers, read the number of shares that you have. Yes, I have 800 shares. Click the sell button. So right now I have a trailing stop order to sell it if the price goes down by 10 cents, $0.1 by 10 cents. So if for whatever reason the price will drop by 10 cents, I will be out. Even if the price would move to 95 and then to 85, I will be out. Whichever new high it's going to be in, I'm going to be out 10 cents lower. You've just seen, by the way, the price moving to 87. So right now, my stop, which was earlier at 74, because when I clicked that button, my stop was at 74. You remember that? Because I was here at 74 and I used a 0.1, therefore 10 cents. But right now, since the price moved to 86, and actually earlier it was 87, the price, the stop loss will be activated, in fact, at 87, no longer at 84. It is just climbing up as the stock is climbing up. So if the stop continue moving higher, the trailing stop comes nearer and nearer the stock price, okay? Comes nearer and nearer the stock price. So right now, it's trailing the stop is trailing up with me. So that's what a trailing stop is. Okay, it trails your orders. Now the problem with the trailing stop is, and this is why I usually personally don't use that unless I walk away. The trailing stop is not so good because it is not being activated but by real support areas. Again, we did not get into support and resistance area yet in this course. Plenty of you guys already know that, but what it is. But for those of you who understand what support and resistance is, then I will just let you know that it looks like the support is somewhere over here at 70, even lower, something around here. This area really is a support. So I didn't have a problem to put a stop at 75 because this is a kind of closest support that we have. But if the stop right now moved to 87, then I'm no longer technical. You understand what I'm saying? I'm no longer technical. So my stop loss right now is no longer a technical stop loss, which is not so good. Okay, now if it was a fast mover and I would walk away, then fine. I would use it if I'm walking away. But if I'm really trying to be technical and look for support and resistance area, then what did I do right now? I just put a stop at 87. There's a good chance it's going to come down to 76, 77 and shoot $1 higher. And then I lost a good trade because I didn't keep to the right technical support that I was supposed to be keeping. That's the problem of a trailing stop. This is why you should consider this carefully. Okay. Now the second choice, let's cancel this order over here. The second choice is instead of using a dollar sign, you can use a percentage sign, meaning how many percents, like 10 cents would be approximately 0.5%. 1% is 18 cents. Yeah, 0.5%, right? Am I right? I think so. 0.5%. So I use a trailing stop of 0.5%. I click sell and there's the order. So it's approximately 10 cents, 9 cents or something like that. So 0.5% right now. I can use it in percents. This one I never use, okay? Just be aware of that because stocks don't really move in percents. Stock really move in points. We don't really count it in percents, but I don't know, some people may prefer it, especially if they're swing traders or investors or whatever. Cancel that. Anyway, that's the two-way of using a trailing stop. Any questions about this? And just let me know because I'm moving to the next thing right now. Now, let's have another order here. Let's learn another order here. And this order would be, by the way, I do have a position of SSYS 800 shares. So I'll be selling right here, limit order 83, sell, I'm out. Okay. Now let's assume I want to long SSYS over this area, over 1890. If it moves a cent over 1890, I want to long it. And I don't really want to stay by and watch it moving over 1890. I want to long it once it moves over 1890. Okay, so what are my choices? One choice is to wait with a limit order at 1891, but that will be a little bit risky because once it moves over 1890, I'm going to have only a limit of 1 cent, not enough. So usually I would probably go up 3 or 4 or 5 cents to 18.5, wait for it to move over 1890 and click the buy button. That's one way of doing that, and that's a simple limit order. Limit 95 if it moves, or I can use a market order to buy it over there. Okay, we learned that earlier. But I could, yes, thank you, use a stop limit order, which is simpler. And this one I really use plenty of times. Okay, so I would use a stop limit order. And in this case, it's going to be, the stop is going to be 91. Stop in this case means change of position. I have no position and it changes to 400 shares. That's kind of stop it is. So it's like change position. It's not stop loss. It's not something like that. It means I don't own the stock. I'm going to own it well at 91. So the stop price means I want to go long at if I'm going to click the buy button, it's going to be long. I want to go long if the price comes up to 91. So in this case, it is based on the ask. If the ask shows 91, then the stop is going to be activated. What is my limit? Let's say I don't want to buy more than 94. Okay, so I'm ready to go long at 91, but if the price really shoots up quickly, I don't want to buy at any price. I want to buy it worst case scenario. In this case, I think it's reasonable because it's not a fast moving stock right now. So my order really is a stop limit order. The stop is 1891. That's the trigger of the buy order, which I'm soon going to click. And the limit will be 1894. So I'm telling the platform, go long at 91. Not more than 94. Here we go. I'm clicking that button. The order is here. And the order is here and is going to wait for execution. If the ask price, which is here, is going to come up to 94, then the order is going to be executed. If the ask price reaches that. Does that mean that there was a trade at 92? 91 in this case, sorry. If it comes to 91, no, it doesn't mean. It just means that the price of the ask reached that. By the way, a lot of people ask me if how the stop orders are being activated. It is activated in this platform, which I think is the best, by the bid and the ask. Even if you have a stop loss order and you want to move, let's say at 75, you're going to put a stop order to move down, to move out at 75. If the bid is going to reach 75, even though you will come an hour later and you take a look at the chart and you see, well, why am I out? Because the price didn't really get to 75. The bid showed 75, but it didn't trade at 75. It actually traded at 76, maybe even 77. Well, the answer is very simple. It's activated by the bid and the ask, not on the actual price. I've seen some platforms and I traded some platform when it was activated by the actual price. The big problem with these platforms is that sometimes when you watch the time and sale, you will see an order which is from another world, like all of a sudden 1993, something like that. There are some orders which are not executed at the market, some mistakes. There are plenty of things that could throw you out of a trade or in a trade if it's going to be executed, if the order is going to be executed based on not the level 2, but based on the actual price. So you really, based on my experience, you don't want to be there. So yes, you could go out at 76 or 77, but it's going to be triggered by the bid and the ask, and this is very important for you to know that, because sometimes again you take a look at the chart and say, why was it activated? I'm not supposed to be in or not supposed to be out or whatever. It is based on the bid and ask, and it's good for you that it is like that. Well, it usually is good for you, but the other choice is not good for you. Let me just tell you that. So I have an order to go long over that price. Why would you use this order? In many times when you have like a whole number here, let's say you have a whole number, a lot of sellers, and it's going to jump real quick, and you really don't trust yourself to be really quick about your click with the button, the platform is going to be quicker than you. It's a good idea to use that. The second reason is many times I'm just watching different opportunities, and when I'm watching different opportunities, I just don't have the time. I just don't have the time to do that. I don't have the time to use to watch every stock that I want to trade, and sometimes I just miss a good trade. So I would definitely use a stop limit order. In this case, I showed you how to use it if you want to go long. So if the price is going to go over this level over here, it's going to be executed, and I'm going to be long SSYS. Okay, same thing applies. Sorry, you have a question. Okay, can be using trailing with a range order. Trailing with a range order? No, you can't. No sense in that. Why would you? Let me just think about it for a second. No, you either use a range order or use trailing. Okay, good. Fine. So stop limit order. Let me cancel this order. The second option is I want to go short under, let's say, 1877. Okay, let's use 75 because it looks like more reasonable area. I want to short it under 1875. Okay, I do the same thing, and now I'm going to do it just quicker. Excuse me for that. In this case, my stop price is going to be what? I want to short it under 75, under 1875. What number should I put here? Write down. What do you think? What the number I should use in? Yep, 74, not 75. Okay, no, not 70. 70. Absolutely 74. Absolutely 74. I want to short it when it moves the cent under 75. I want to be short when the price here reaches 74. Now, of course, if you want to be extra sure that you're going to get in and you didn't have this issue earlier I mentioned about this 74, 75 issue that it wasn't traded at this price at all, yes, you can use 73. I never do that, and please don't do it yourself. There's no sense in doing that because in 90% of the time it's going to hit 74. Okay, just Just don't do that. No reason for you to do that. Okay, so I'm using 74, but I'm also telling my platform if I'm short at 74, I don't want to short less than, let's say, 70. So that's my limit. Please short at 74 once this price reaches 74, not worse than 70. So if the price really drops down very, very quick, not less than 70. Let's try to really have an order here. Maybe we can do an order at this case. Let's do it 78. Okay, 78, not worse than 75. Don't show. No, I'm gonna go a little bit lower than that. 77. I click the short button. Oh, sorry. Too close to the price. That also happens. I'm gonna do it at 75. Short. Oh, this price now needs to be. See, I'm making mistakes. Okay. I'm making mistakes. 75, 72, click the short button. Now I have a short order at 75 with a limit of 72. So it's going to be triggered at 75 with a limit of 72. By the way, you've seen me doing two mistakes. One, the short price in this case with a stop limit, it cannot be 1 or 2 cents below. I think the limit has to be 3. It has to be at least 3 cents away from the price, something like that. And I try to do it maybe 2 or 3 cents away from the price. And the second thing I did, I used a stop limit at 75 and a limit at 75, which of course I can't do. It needs to be below that. Now then I click the short button. Once I click the short button, I have an order right now to go short if the price goes under 75. Does that make sense? Is that absolutely clear? Or if you have any questions about that. Let's cancel this order. Clear. Good. Now it's going to get even more complicated. Now I want to do it this way. I want to short it at 75, not more than 72. I want to take my target at 60. I want to have my target at 60, and I ought to have my stop loss at 19. Stop loss in this case if it goes higher. Okay with that? Let's do it this way. Implement range. Now I can implement range with a stop limit order. See how I do that. Okay, implement range. Stop price, sorry, at 75. I want to short it when the price here reaches 75. Limit at 72. The low range is 1860. The high range is 1890. Sorry, I have to use a point. 90. Now look at what I'm doing here. I'm actually telling the platform this. Go short if the price here reaches 75, meaning if this drops. Not worse than 72. Cover the short, meaning buy at 1860, that's my target. Okay. Or if it goes the other way, which is the wrong place, cover my short at 1890, which is in this case my stop loss. So I'm going to click the short button right here, and I have an order. So that's what we call an order that is a complicated order, or there's also a name to that. It's called TTO. You must have learned this yesterday with Danny. It's called a threshold triggered order, TTO. Okay, so yeah, you can go and have a coffee and do that, which is really quite neat. I mean, it's fun. You have your target, you have your stop loss. You're not even in the trade right now. By the way, it could be executed really soon because it looks like price is moving down now a little bit. Maybe it will, maybe it won't. So it really will be triggered at 75. I will be short 400 shares if it reaches 75 here, and then my target will be 1860, my stop loss will be $19, and that's it. Now, one of the, let me tell you this, it's less used, it's used less during a trading session. By the way, you can use it, which the other thing that I showed earlier was, by the way, what's the difference between this one that the one I used right now and the range order. Is there any difference? What do you think? What's the difference? Range gets you out, this gets you in and out. Yeah, absolutely true. If I'm already long a stock, right now I don't have anything. If I'm already long or short a stock, I could use a range telling my platform, please move me if it moves higher or lower, depending on what I want. So if I'm already long or short the stock, okay, this is what would happen. If I'm planning into moving under 75, then right now I'm using an order which will get me into the trade at 75 and out of the trade. So if I'm planning to go long or short at 75, therefore this is the order I would use. The range I would use once I'm already in the trade. This one I would use even before I'm in the trade. Okay? Now the same thing applies for an order to go, let's say, long. Let's, just leave this one behind, even though it looks like it's just about to trigger. But we'll watch the numbers here and we'll see if it triggers. Let's think about doing the same thing with AMAG here, and let's plan a long play if it reaches 45. Okay. Now I want to go long, limit order. I'm going to use a stop limit order to go long at, in this case, 23.50. Let's hope it's not going to reach us. Not more than 23.55. Okay. And I'm going to use a range, and I'm going to say my target is going to, let's do something quick, okay? 23.60 and 23.40. So let's even use 45 now, okay? Because there's no, okay, 45. So I'm going to use a stop limit to buy at 45, limit at 55, target 60, and the range right now, I'm not sure I can use that right now. 45, I can even move to 40 right now, can't I? By the way, SSY has just went through. As you can see, I'm already short, so that means the price was triggered. And right now I have the range order. So 40, it's jumping away on me. 50, I can't even use this one now. 45, click, buy. Okay. Orders? No. What happened? Stop price, 23.50. Oh, 400 shares. At 50, limit 55. Low range, of course. Low range has to be 23.30. And this one has to be, high range has to be, let's say 60. Again, 50. Buy. Okay, now I've done it right. So I have an order to go long if the price here is at 50, and I have an order to sell at not more than 55, and my high range is 60. If it's going to reach 60, I'm going to be out, and my low range is 30. That means if it goes down, I'm going to be out too. But it's not being implemented right now, as you can see. Let's go to SSYS. By the way, notice what I'm going to do right now is just I'm going to click that one over here, and immediately I can see that. So the target in SSYS was, it's no longer here. Okay, nevertheless. Nevertheless, okay, I'm short anyway. This one triggered, the 75 triggered, so I'm short SSYS. So again, I can use this either side to go long or to go short, and that is a very simple order to do on either way. Any questions? How to cancel the range while I am in the trade? Well, you just click here and you cancel it. If I'm going to cancel, I can cancel both orders right now. Here we go. I just cancel both orders right over here. If you're in the trade, doesn't matter. You're in the trade, it's not going to sell your position. You see, I'm in the trade right now. I canceled it. I canceled the range order. Whatever is left really in SSYS was the range order because it was executed. So what is left really is just the range order and I just canceled it. I'm in the trade. Right now I have no stop loss, I have no target. I just canceled it. As simple as that. Okay, the next thing is it's something very important really. It's something very important. Now you may see me post in my weekly reviews. You may have seen me post trades because I do post weekly trades in my weekly review. So you know what? Let me just take out. What was my last one? It should be here somewhere. Hold on a second. Yep, I have it. So I had a long idea of SLB over 87. Which did not trigger, but may trigger. Okay, so if you watch SLB, that's my long idea. And again, we learn technical formation and things like that, not right now. But I have a long idea to go over 87, which is a very, very nice technical formation over here. But SLB did not trigger yet. Okay, did not trigger yet. So let's say you want to swing trade. By the way, I highly recommend you swing trade side by side by day trading. Swing trading, by the way, is simpler than day trading, and we're going to get to this in the future. But basically, my trade idea, which you may have seen in my weekly review again, is go long SLB at 87. Now, just that if you haven't, excuse me for a second, if you haven't seen that yet, then it's on my YouTube channel. It comes up every week and you can see it right here. And I would say which stocks I'm looking for, long or short, for the weekly review. Again, it's on my YouTube channel. So SLB over 87, that's a whole number. It's a very quick thing, a very simple thing to do. So what I would expect you to do if you want to join in my swing trades is just determine how many shares you want to buy. I would probably suggest to go less than 400, let's say 200 shares, and SLB, and then I would use a stop limit order, and I would use 87.01 because I want to make sure it's moving over 87, but not more than 87.10. It's a swing. I could give it some space, okay? Not more than 87. I never lose more than 3%. We will discuss that in the 3x3 method when we will learn this method, which is a very, very important method for swing trading. And that is just calculated 89.69. So I want to have a low range of 89.69. So again, sorry. Mistake. 87 double 0.97 84.39. 84.39. It's going to be my low range. My high range, maybe we will discuss that. Also 3%. That's 89.60 89.61, and that means please go long. If I'm going to click the buy button, please go long, that's the order, please go long 200 shares if it moves over 87 and not more than 87.01. However, if it moves down, never lose more than 3 cents. If it moves up, sell at a 3% profit, sorry. If it moves up, sell at 3% profit. By the way, the market is out right now. I'm going to click the buy button right now, but I'm out of market. I missed it. In the pre-market, sorry I didn't, I was just about to show you how to do that. but the market just closed. In the pre-market, you're supposed to be able to do that. Okay, so you can in fact use this order in the pre-market, have an open order to go long if it triggers throughout the market time, which is something that is very, very useful, and you should in fact try to do that if you want to go long or short my swing trades. And why should you be considering that? I want to show you something. The reason you should be considering that is because if you take a look for this at this example, this is the example of all my 2016 swing trades posted in YouTube, and every week I pick up 2 trades, and at the week later I discuss these trades. Did they go right? Did they go wrong? And here comes my 3% profit or my 3% loss in this case. Now it's a little bit more complicated that I will get to know it better. But if you take even the simplest way, which is not the best way, by the way, but it's the simplest way, called 3x3, even either a 3% loss or a 3% target, then these are the green ones are the ones that triggered and worked out fine. The red are the losers. But if you would go all the way, throughout the year and check out my results, you will see that the total gain is 63%. That is greens minus reds. So you could have made 63% on these trades if you took them. The market, by the way, at this time did 9.5%, just to show you the difference between the market and what my triggers did. And I had 21 losers, 42 winners, total 63 trades, and the win ratio is just below 67%. So, you know, they say that over 60%, you're a great trader. Over 65%, you're sort of a guru, and over 70%, you're God. But in this case, it's quite a good result. So you could, in fact, also do swing trading and use the same thing that we just learned, the same order that we just learned, the stop limit order, even at pre-market, better at market because you're going to see more things like gaps and things like that. But even at pre-market, you can use the stop limit with implement range, a 3% target, 3% stop loss. By the way, I usually don't use that because I would like to see them get to 3%, and once they get to 3%, then I would sometimes say, well, it looks like it could go easily another $0.50 or something like that. I may keep it, but I'm more experienced. If you're less experienced and you just want to go by the book, and this is, by the way, what I just showed you, this is to go by the book. Is by the book better? No. If you know what you're doing, if you can move your stop loss sometimes, if you can move your target sometimes, you will do better. And we will learn the 3x3 method sometime later this course, which is a very important method to learn. But if you even do it the simplest way by 3x3, as I just mentioned, you would still get a gain of 63% in a year. Now tell me which fund manager did that in the last year. No, it's not the $3 rule. It's 3% up, 3% down. But again, we will get into this. Later. Any questions? What happens if the stock opens with a gap higher or lower on a swing order? Then you are, sorry to say that, fact. Absolutely. This is a part of the game. Nothing I could say, Amir. This is the part of the game. Sometimes it happens, sometimes... By the way, you're only losing 50% of the time. Okay, you're only losing 50% of the time. So in 50% of the time you're going to be making money, and 50% time you're going to be losing money. You know, it really is like that in my experience. Sometimes I just, move. I have a gap up, a gap down. My stop loss is under my planned price. My entry sometimes is different than what I planned. And I'm watching this and oh my God, it cost me so much money. Other times I'm watching this and I'm saying, oh my God, I earned so much money today. End result after many years, really? Zero. Seriously, it's zero. And if you keep on to other rules like take a trade with a trend, for example, then most of the time, really more than 50% of the time, you really make money. You really supposed to be making money a little bit more than you're losing money. So that is in fact a little bit. Sometimes it supports you, sometimes it's not. If you lose, double up on the next trade. Okay, not in my school. I hope you're joking, by the way. I hope you are. Okay, so this method that we just discussed here was the complicated threshold triggered order. And by that, really, I finish everything that I wanted to show you about orders. It's not that complicated, especially if you do some training with the demo. So I do expect you to rehearse every trade that we learned today. In fact, you started learning that with Danny yesterday, but I do expect you to rehearse each and every of these trades tomorrow when the market opens with the demo platform, and just to make sure that you really know what you're doing, and just to practice each and everything. Right now, I do understand if you're first doing this, it sounds and looks a little bit complicated, but if you're going to practice it for yourself, it really is going to be simple. It really is going to be simple. It's not that complicated, really. Okay, by the way, market was closed and I'm left with 400 shares of SSYs. Lucky enough, it's a demo. Okay, any questions before we move to the slides? Because we have a lot of slides to cover today. By the way, we're going to take a small stop right now and come back in like 15 minutes. But if you have any questions right now, I'll be glad to answer. Okay, so let's have a break of 15 minutes. Yes, sorry. Will this be sent by email at the end of the course? Yes, absolutely. You're going to get each and every presentation. Absolutely. Plus, it's already on our Moodle platform, so you can in fact watch the videos. The videos of yesterday's are already watchable. I'll ask Scott to send you the link, probably going to send it to you tomorrow, but you're going to have the videos of yesterday if you missed any of yesterday's class, and of course today's. So if you are tired, want to go sleep, I don't know, you can still get the videos later. Let's have a 15-minute break and come back in and continue. So see you in 15 minutes, guys. Okay, traders, I'm back. Are you? Okay. Good. So we can start. I want to talk to you about the basics, and we'll start from here. If we start from the basics, of course, of technical analysis, and technical analysis, what it's all about, and what you are supposed to be, in fact, doing with that. First of all, even though it may sound a little bit complicated, technical analysis is really relatively quite simple. It is very simple. It only shows you really the request, the demand, or on the other side, the supply of stocks. So in fact, if people are buying or if people are selling, don't complicate it too much, okay? Really don't complicate technical analysis too much. I would ask you a question. In your opinion, can we rely on technical analysis, just on technical analysis? What do you think? I mean, technical analysis is of course something that we watch on the chart. We watch the way that the chart behaves, and we try to figure out what we're supposed to be doing with the formation that we're seeing. So again, here's the chart. Can we decide from what we're seeing over here what is about to happen? Maybe intraday, maybe on the daily, whatever. Can we make a decision based on that? Some of you guys say yes, some no. Okay, when I started trading, my general feeling was that I could trust technical analysis, and I was, as I would say right now, I was, let's call it this way, 100% technical. I'm no longer 100% technical, absolutely not. I would say I'm probably more like 70% technical, 30% fundamental. So you need to be using the technical analysis as a tool. It's not just technical analysis. It is in combination with other things that you should be using technical analysis. So sometimes, based on a certain formation that I see, I may consider technical analysis to give you the whole truth of what is going to happen. Sometimes I don't, sometimes I use fundamental too, sometimes I combine them both. Once I combine them both, fundamental and technical analysis, therefore I get the whole picture. The whole picture is better than a part of the picture. Just technical analysis is just a part of the picture. Don't disregard the fundamental if you can. Now, the problem with fundamental, of course, is that you really never know what to expect. You can't trust the company owners to give you in these quarterly reports that the data that really is required. You can't really trust the analyst because most of the time they are in fact failing. You can't really trust anybody, but you can trust what you think the general public will do. Like, for example, let's assume a company lets you know that they are about, and it is fundamental, of course, what I'm just about to say. Let's say a company announces that they're going to buy their own shares with $2 billion. They think the price is too low. They're going to buy their own shares with $2 billion. What do you think is going to happen to the share prices? Any idea? Up or down? They just announced they're going to buy it with $2 billion. Of course, they need to announce it, right? They need to announce it. They can't just go out and start buying. They are a publicly traded stock and company, and they need to announce it. Rest of you guys don't have any opinion about that? It's not really fewer shares, Nicholas. It's not really fewer shares. It has more to do with really up or down. Come on, guys, up or down? We got 2 ups right now, 3 ups. 4, 5, 6, 7. Okay. Okay, first rule that I should have started with that really. Should have started with that yesterday when we started our course. The first rule about trading is always do the opposite of what you think. So I'm sorry to say you're wrong. And the reason that you're wrong is because the market, in fact, always behaves in the opposite of what you really think is going to happen. Didn't you, by the way, realize that till now? If you're trading with me, not only with me, if you're trading at all, I mean, if you're trading at all, what's the reason you lose money? I mean, when you start trading, sorry, I'm just, excuse me for joking, okay? But it's not really just a joke. It's partly serious and partly a joke, okay? So what the reason you are in fact losing money? The reason you're losing money is because you're doing things that you think that they are the right thing, but in fact they turn out to be the wrong thing. So if you want to make money in the market, do the opposite. You're going to make money. I'm not joking. I'm serious right now. Do the opposite. Can you really do the opposite? No, you can't. Why? Because your mind tells you it's going to go up right now. And if your mind tells you it's going to go up right now, you can't go against your mind and short it. Okay? Really, you just can't do that. But if you go back a year later, let's say your first year, where most of the people are in fact losing money, and you do the exact opposite of what you did, you are making a lot of money. You are absolutely having a good chance to make a lot of money if you do just the opposite. So why do the company that lets you know that they're going to buy their own shares, in fact, the price of the share goes down? Now the price of the share goes down again because there are some forces behind the scenes that you need to know about. Yesterday we talked about the institutional traders. Now imagine what happens. A company goes, let's say SLB, this company, okay, goes to Goldman Sachs and they say, we think the price is just way too low. And let's say it happens somewhere around here, okay, somewhere around here. So Goldman Sachs says, fine, you want to buy 2 million shares or $2 billion, sorry, $2 billion of share worth of shares. We're going to buy this for you, no problem. Regular fee is 3 cents. But if we discussed that yesterday, by the way, but if I'm going to get you a better price, then you may pay me up to 10 cents more. Okay, they're going to sign an agreement and Goldman Sachs is going to start buying. Now, what do you think is going to happen? If Goldman Sachs can make money from the price from buying $2 billion for the company and he gets a better commission, if the price go down, guys, what do you think is going to happen? Now, is it the 20% like you and me that move the market? We are, by the way, a very, very small percentage of the market. We discussed that that just traders are 20% of the market, right? And institutions are like 80%. Guys, it's going to go down because Goldman Sachs is going to make money from the fact that it goes down. So the first thing that's going to happen, even though you jump the morning after and you start buying this company's shares because you think it's going to go up, seriously, it's going to go down because they will use every trick in the book to drive the price down, and believe me, they have plenty of tricks to do that. So the price will go down. They will buy the $2 billion worth of shares in a lower price, and then later the price will go up. So really, don't trust whatever you see in the news. You need to know the facts behind it. You need to know how the market really behaves, but do read the headlines. And most of the time, do the opposite of what you read. Like if you read that a company buys its own shares, be real suspicious about it and wait and see what happens. If you see the price moving up, nothing to do there. You were wrong. Okay, you thought the price is going to go down because Meir told you the price is supposed to go down. Fine, sit on the fence. If you see the price go down, now you realize why this happens. Maybe you want to short it. But it's already in the news. Does it mean that you have to go according to the fundamental where the crowd goes? No. You need to read the fundamental. You need to be aware of the fundamental, but you're definitely not supposed to be doing exactly what you think is about to happen because of the fundamental. Now you need to combine two things together. You need to combine the fundamental and the technical analysis and live to see that you were right. In case you were right, you will take the trade. In case you were wrong, you will just take an amazed look at it, at the way it behaves, and say, well, this is not what I know is supposed to be happening. If it's not what I know that is supposed to be happening, I'm just not participating. That's all. Nobody forces you to make any move. Actually, sometimes you make much more money in the market but not doing anything at all rather than doing something. So if you don't really know what's going on and really have the belief that you really have the understanding of what's about to happen, just don't participate. Nobody forces you to participate, okay? Nobody forces you. So you do need to combine fundamental and technical because you need to understand what the crowd of people are going to do now. You need to understand what's probably going to happen, and you need to get confirmation from the technical. So once you combine both of them together, then you have a winning winning combination here. And the winning combination is understanding how to behave based on public behavior, based on technical analysis, based on the trend, which we will talk about soon, based on support, resistance, and so on. But the main thing, of course, as I just mentioned, is to understand what is about to be happening based on what most of the people will do. So technical analysis is really based on behavior. It's based on the way, the psychology of the crowd. It's based on what's going to be the behavior of the institutional traders based on the psychology of the crowd. And once you combine them both together, guys, this is technical analysis. Okay, this is technical analysis. Let's start our journey with the technical analysis. Okay, Now I don't. If you already noticed what I'm about to say, we're doing the introduction right now. We're going to talk about several things like volume, trends, support and resistance, breakouts and breakdowns and things like that. But the most important thing for me is that you understand that there is a person behind it. When you're making money, somebody else is losing money. There's a person behind it. Somebody else is doing something else. Okay? You need to know what he's doing, you need to anticipate what he's doing, and you need to behave according to that. So we're going to do the introduction to technical analysis right now. We're going to talk about technical analysis and really the fact that it's a study of price movement in the stock or any other asset. It's not just stocks. We are talking here about stocks. We are trading stocks, but in fact, it is used in order to analyze the market, understand the market, and to develop trading ideas. So this is the things that we are in fact about to encounter here. Let's first talk about the volume and trend. The first thing you will always hear is there's a very good saying which is the basics of technical analysis and says the trend is your friend, and there's nothing more true than that. Nothing more true than that. So Amir asks, so basically you use the technical analysis to follow the trend caused by fundamental analysis. Yes, absolutely true. The fundamental analysis is, well, okay. It's not just the fundamental analysis that I'm following what I think the crowd is going to do according to the fundamental analysis, because that's the only thing they read. They read the results of the company's earnings, they read what the analysts have to say, and they will act accordingly. But you need to be smarter than that. You need to add it to the technicals, you need to expect something that regular persons don't know, don't expect, and really act accordingly. Okay, so we're talking about the trend. And what is an uptrend? An uptrend occurs where the stock price moves two or more consecutive higher highs and higher lows. Now, that's the first high, that's the first low. That the low is always a support because buyers came in. The high is always resistance because sellers came in. But when you continue farther, then at one time you need to discuss where you have a trend, because you do not have a trend just after this first support and this first resistance. The determination of a trend that you need two or more consecutive higher highs and higher low. So in fact, in this minute right here, when we got this recent low, right after that, somewhere in this time over here, okay, we already have two highs, two lows, and both of them are higher lows and higher highs. So once you get higher highs and higher low, that's a definition of a trend. Now it's you don't really always need to act exactly according to the trend that is absolutely cut clear. You need to anticipate things. So okay, so that's the definition of the trend, but you really need to be a little bit wiser than that and start anticipating what is about to happen. We'll get we'll get to it in the future. But again, we're looking at a trend here, and this trend specifically continues, and at one point, as you can see here, it moves down, and then as you can see, the price reaches the recent support. What do you think in this time exactly? Would we define it as right now? Would we define the trend as a downtrend? I mean, if we define this one as an uptrend, would this be called a downtrend? What's your opinion? Yes or no? What would you say? Is that a downtrend right now? Alan says no, no trend, not yet, not yet. Reversal, yes, possibly. You're right, no trend. So we do not have two lower highs and 2 lower lows. We may have another lower low, but as you can see, we didn't break this low yet. As long as we didn't break this low yet, this low is still a support. There's a very good chance that the price will bounce from here and move higher. By the way, we do not really talk about lines of support and lines of resistance as is pointed out here. It's more like an area of support, an area of resistance, okay? So don't really, if you see a stock moving down 2 cents below the recent support, not really a breaking of a support has just happened or something like that. Anyway, this is an uptrend, and an uptrend is defined by higher highs and higher lows, but not only. We also look at the volume. We want to see the volume growing as the price moves higher, and we want to see the volume in fact shrinks as the price moves lower. So again, a very good example is to watch the volume as the price of the stock is declining or moving higher, and just to see whether it supports or doesn't support the trend. Let me try and show something here. I'm just watching, you know. Hold on. Let's go back to my screen sharing, and I'm sure I can find better examples. Now, as you can see, the price here is trending higher, okay? Higher highs, higher highs, higher highs, higher lows, higher lows, higher lows. This is the same SLB that we were discussing earlier. So we do have an uptrend in here. If we go closely and watch, you can see that once the price moves down here, it moves a little bit lower. Once the price moves up, you see the volume growing higher. Price moves down, the volume is a little bit declining here. I don't see much of a sign here, more like here, and that is approximately, yes, exactly the time where you can see this decline over here. You can see that the volume is lowered right over here. So really, once you see an uptrend, you want to see the support, meaning more people are buying as the price moves higher. And when you see a pullback, you want to see the volume declines. So that is really the definition of an uptrend. So the definition of the uptrend is higher highs, higher lows. And again, I'm getting back to the very well-known phrase which says the trend is your friend, and this is so true. That the main thing I'm trading according really is the trend is your friend. But in order to identify the trend, you want to see the volume grows as it moves higher, the volume declines as it moves lower. Yeah, of course we will, Mohammed. Of course we will. Anyway, so going back to my slides. Let's see an example of an uptrend. We can see it here. This is a very simple example of an uptrend. As you can see, the price is trending higher. Now, I'm showing you here the price trending higher by month, but it could be shown intraday exactly the same way, absolutely exactly the same way. Now, if I'm going to show you a stock that is declining today, then again, screen sharing, and as you can see, we shorted this one today. We shorted AMAG over here. Look at this absolutely amazingly nice decline over here. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, decline throughout the day. The trend is your friend. It should usually continue. It doesn't always do like that. It doesn't always move like that, but certainly once you take a good look at it, you can see that it trended lower. So we have a stock that is moving higher, Google, a long while ago, but as you can see, you will find first high, first low, second high, second low. Again, it's not that clear, and you could find probably other locations too. So again, don't regard this as a 100% correct tool, but you can definitely see higher highs, higher low, and Google looks like it is moving higher. So you can always take a look, also take a look at the volume. As you can see, as the price moves higher, you can see that it's growing, and declining when the price is moving lower. So you do get the support of the volume in this case. And we have just discussed the issue of an uptrend. Let's talk about a downtrend. The same story. I'm not going to spend too much time on that, but you want to see a decline in prices. You want to see lower highs, lower lows. Once you have two of them, lower highs, lower lows, therefore you have the definition of a downtrend. And as you can see over here, it looks like it may change direction. It didn't yet. It still is facing the resistance over there. It did not change. If it's going to move over, then we could definitely say that we have higher highs, higher lows, and therefore change of direction into an uptrend. Same thing applies for the volume. Once you're downtrending, you want to see the volume growing, this time is once the price moves lower. You want to see the volume growing as the price moves lower, and you want to see the volume going down, moving down when the price is moving higher. So in fact, you want to see the support of the volume to the downtrend. And the same thing applies. I'm not going to discuss this any further, but this is something that is very useful to see. Yeah, the volume shows the intention. And here's an example of a stock which is downtrending, and as you can see, you have first high, first low, second high, second low, and we continue. So it's higher high, lower highs, lower lows, and take a look at the volume as it grows once the price is moving lower, and this is giving you some kind of a confirmation to the trend. And again, don't look for something that looks 100% cut clear. It's never like that, but you can definitely see that the stock is trending lower and is in fact very, very interesting, maybe to short it somewhere. So you could find some trading ideas based on a downtrend or on an uptrend and so on. Now, if you take a look at this stock, for example, this price movement, then definitely, as you can see, it doesn't really go anywhere. Doesn't really go anywhere. Now, can you give me an idea how you can make money in a stock that looks like that? Do you have any idea? Can you make money? And how you can make money when you see something like that happens? Trade the channel. By not trading it, Hyro. Short the top, buy the bottom. A channel, yeah. Short resistance, buy support. So your idea is like wait for the support, buy. Wait for the resistance, short it. Same thing applies as I mentioned earlier. Don't do it. When you see something that is as simple and clear as that, please just don't do it. And as Hyro said, just you're gonna make more money if you're not going to do that. Guys, it's a suicide, okay? Never ever in your life get to a point where you think that you know what's happening. In fact, the only reason you think you know what is happening because you're watching it right now and you can see that in fact maybe you were right because it really did that. But you know what? Before it did that, let's say at this point over here, could you really know that it's really going to continue consolidating like that? Or maybe you just bought the new high here, hoping that it's going to go higher from here or something like this. Basically, when I take a look at that, I have absolutely no idea where it's going to go next. When I'm here, I have no idea. When I'm here, I have no idea. Right now, when it's finished, yeah, I can take a look at that and say, well, I could have gone long here, could have gone short here, could have gone another long here, support, resistance. Guys, you never know if it's going to break over, break down, when it's going to do that. You only look at it at a perspective right now and you say to yourself, well, I could have made some money there. Please, 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 please. Serious, pretty please. Don't ever get involved with anything that looks like that. It is impossible to anticipate the move. It is impossible to know where to buy and where to sell. It is not a system that you can make money off. And you may make money if you get lucky, but at the end game is going to be a losing game. You're just not going to make money doing that. And there's no trend. And yes, the trend is your friend, therefore there's no trend here and no friends. Absolutely no friends here. Yes, absolutely better to trade the breakout or the breakdown. If I'm going to see something like that, I'm going to be very... So, how ugly could I paint that? I could be very interested in going long over this area over here. Or maybe going short somewhere around here. Maybe. Something like that. Absolutely. That is, you want to see it moving out of the range, okay? The more it consolidates, the stronger the move is going to be, okay? And it is a good way to it is a good setup to trade something that looks like that, just in case it moves out of the range. Just in case it moves out of the range. Okay, let's talk about support and resistance. First, we talk about resistance. So, why do we have resistance? We have basically because there are several reasons why we have resistance. Well, resistance is first the point where a stock is being stopped by moving higher. Okay, let's go again to share screens here. AMAG, that's resistance. That's a very clear resistance area. Okay, area, by the way. Again, you can see that it moved up a little bit, but again, as you can see, that's a very strong resistance. By the way, today it crashed. I don't care about it, but anyway, until then, that was a very strong resistance. Over here, that's resistance too. Okay, so why do we have resistance? We have resistance because of several reasons. Resistance is done again by people like you and me. There are people who are selling. So first of all, resistance level is a level where the stock has previously had difficulty in rising. So if it came to the point, again, I'm going back to my chart here, if it came to the point it had difficulty rising, that means there are sellers over there. Somebody is selling over there at maybe at any price that is just above this level over there, any quantity that is just above this level. Why did this person or persons or companies or institutions, whoever, thought that they should sell over here? Maybe they knew something about what happened today, because today it moved down. I don't know how many percents here, but today it moved down dramatically. So maybe somebody knew. Always, by the way, somebody knows. Always. So this person or persons were probably selling whatever they could over there. That constitutes a resistance. You want to go long only if it breaks the resistance and moves higher. But until then, you just don't know. So you have previously an area where it was where you had where we had people selling it, and there are people who would trade. There are people who would trade the channel, as you mentioned earlier, which is the wrong thing to do. But there are people who would do that. So you may find resistance because some people are shorting it at a point where that happens, and it's one more reason. So sellers trends prevent the price. Right, sellers could be, well, why there are sellers, that's what I'm more interested. The sellers because there may be some people who are shorting it at the highs. Okay, so the more often the stock tests the resistance line, the stronger the resistance line is. So as you could see in here, in the case of AMAG, that was a very strong resistance which was tested several times, and yes, it was very, very strong, and in fact, I don't see it coming over that point probably in the next few years or ever in its life. So again, it retested this area many times and it became stronger and stronger the more it retested it. So the longer the stock retest tests the resistance line, the stronger the resistance. Yeah, please just say that. Okay, so we have here an example of resistance, and as you can see, that is a very clear resistance. We've just seen that in AMG, and of course I'm watching it over several months over here, but it's not necessarily just a case of a daily chart. It could be on weekly chart, it could be on intraday chart, and so on and so on. So there are several reasons, as we just discussed, for resistance. There are buyers who bought the share at a lower price and are closing their position. So again, if you take a look at over here at AMAG, it could be that somebody bought here, knew that there's going to be a resistance at the highs. So once the price came here, this buyer is selling. It could be a buyer who bought here, was hoping to get a better price, so the recent high here, knew this is going to be a resistance and is selling. And some buyers who bought here knew there's going to be resistance and are selling. So again, these buyers who bought earlier and are selling here are the ones, among others, that are in fact causing the price to go down and constitute the resistance. Now, another thing, of course, is short sellers. Short sellers see the price moving higher. They may want to trade the channel. If she's wrong, they can see that there is a resistance over there. They may just short it. And again, short sellers are the second group that are in fact causing the price to move lower. So we do have also the disappointed buyers, and the disappointed buyers are the ones that are waiting for the price to come back to where they bought earlier. Now, if I go back to AMAG, let's just assume you've seen the price shooting higher like that. You like it very much. Of course, you don't know what's coming next. You don't know what's coming next. You don't see the rest, okay? Certainly you don't see today. So you watch AMG moving higher. You're very much interested in buying it because you read some analysts saying it's the amazingly next, I don't know, whatever kind of company, pharmaceuticals that just develop a cancer drug or whatever. And there you go and you buy the stock because you were expecting it to continue to the sky. Okay, and then it drops down like 10%. This is about 10% drop over here. So it drops like 10%, and then you start thinking about what a fool you were because you were buying it over here. And the only thing you think about right now is, please, please, please go back to my entry price. And I promise, if you go back to my entry price, I will never ever in my life make the same mistake and buy stocks which whatever. I will never believe to this analyst anymore. I will never believe to my friend who told me they have the greatest drug and it's just about to be announced and they're going to save the world. I will never do this foolish mistake again by getting involved in the stock market and investing my pension fund in this stupid stock that is just down by 10% in 2 days, or actually in 1 day. I will never do this mistake again. And the only thing this guy is praying for now is what? What does he pray for? The price goes out? Absolutely, but where? Where to? Absolutely. To the buy price. He wants to go flat. The only thing this guy is praying for is that the price would go back to 36. Please, please go up. I promise I'm never going to smoke again. Please go up, please go up, please go up. Yes, got you. 36. I'm out. I'm out of this market. I'm never coming back to the market. I'm never going to participate again. I'm done with this BS. Sold. So what happens here is the fact that this guy or other guys that bought at this price are selling. So again, resistance is also being done by people who are buying, failing, selling where it comes back to the same point. Okay? Selling when it comes back to the same point. By the way, all of these people who bought it here are waiting for the price to come back up after what happened today. So watch what happened today, okay? When the price is going to start moving higher, if ever it's going to happen, for every cent that it's going to move higher, for every cent that it's going to move higher, it will also find a disappointed buyer over here. This buyer over here, which bought it like 3 months ago, 2 months ago actually, he bought it like 2 months ago. This buyer over here saw his money growing from $30 to $36. This guy made 20%. He thought he's a financial genius. He absolutely thought so. Okay? He was just planning to buy a new car, move to a new house, whatever. This guy today just saw his beloved stock dropping 20% or 30% below his entry price. So the thing is, every cent that this stock is going to do by moving up in the next few years going to find a disappointed buyer, which, believe me, is just waiting around the corner. These guys are just waiting around the corner. And if you want to see how many are there, actually go to the weekly chart and start moving back. Oh my God. Oh my God. I never saw that. Tell you the truth. Never saw that. Do you know how many disappointed buyers are in AMAG? They will never go and see the money again unless really AMAG develops the drug to cancer, the solution to cancer or something like that. I don't know. Okay? So just see how many disappointed buyers there are out there. Really, seriously, exactly, Nicholas. Oh my God. So sometimes you really need to take a look at the weekly in order to understand what's going on. So this is how resistance are being done. This is what's happening in resistance area. And really the same happens, and I'm not going to waste much time at support here. So let's go quick over that. Support is where it had difficulty earlier to move lower. So support really is where buyers came in. So the buyer strength prevented the price from going lower. And the more often the support is tested really, then the stronger the support is. And the longer it's tested, then again, the stronger the support is. So it's exactly the opposite. Now we're talking about support level. Earlier we were talking about resistance level. So support level could be a place where buyers came in earlier. And again, it was proven here, it was proven here, and it could be proven in the future more and more times. So reasons for support, it's exactly the same. And again, I'm not going to waste time on that, but we are in fact talking about short sellers who sold the share at high price. They are right now closing their position. And again, closing their position, if you are a short seller, that means that you are buying. And we have a share approaching a previously visited low, attracts buyers who are looking for a cheap entry point. So somebody is trying to buy at the low price, even though the stock is now trending lower, whatever. Big mistakes, but they still buy. Okay? Don't do it yourself. And disappointed short sellers. Disappointed short sellers are the ones who in fact shorted it, but then again later saw the price moving higher. It came back to where they were, and they are in fact moving out by buying. So again, I'm not going to get into this. I don't want to waste your time, but these are the reasons for the support. And you can see that plenty of time, and you just need to understand really the mentality behind it. Because what we were discussing right now is not really the fact that there are resistance areas or support areas, just like in this chart over here, but the fact is what is really going on behind. You want to understand the people. This is why you want to watch the chart. You want to watch AMAG and see where it's coming from. And if you watch AMG and see where it's coming from, then you would say to yourself, oh really, seriously, a lot of people hate this stock. First, I don't think a lot of people are going to buy these stocks. Second, every cent it's going to move up is going to find some disappointed buyers, and it's going to have really, really hard time moving higher. I'm saying this just in case you thought that because it moved down by, I don't know, 30% today or something like that, then maybe you've got a nice catch here. You could buy it cheap and hopefully you trade. Excuse me for laughing, but you trade in the channel and you try to make some profit because it's still in the channel. Seriously, guys, just think about all of the people who are here. You don't want to mess around with them. When it's going to start going up, there's going to be so many disappointed buyers who are going to start selling as long as it moves higher. Okay, let's go back here to support and resistance, because there's another interesting thing that is going on here and has to do with in fact what we call a retest. Okay, we call that a retest, or support and resistance, or role reversal. Okay, so let's take a look at here. We had a resistance over here, and the price finally moved up. And again, the longer it takes and the stronger the stronger the resistance here, by the way, the higher the breakout is going to be. We have a saying that says the longer the base, which means it's basing over here, the longer the base, the higher into space. And the same thing applies for here, but it's not the same phrase, just that it's going to move lower much stronger if this lasts really long time, okay? So it hits support, it hits resistance, and finally it goes through. But now the role is changing, meaning what was previously a resistance now becomes support. And this is so technically clear, you will see that in so many cases. And what's the reason that this kind of thing happened? And again, I want to go to crowd psychology. Excuse me for not going by the book and just teaching you what support and resistance are and what trend is, because I could finish that in 5 minutes. I don't want to do that. I want you to take a look at stocks and really understand the people behind it. I want you to understand their psychology, their behavior. I want you to understand what they're doing. The trick about understanding trading is not really the mathematical about buying low, selling high. It's about understanding where the price is going to move based on several reasons. We discussed yesterday the S&P 500 and the institutions, what they're going to do. But you need to understand those 20% also who are the people who are investing in the stock. These people also have some influence. And again, it's not just institutions. Now, let's take a look at what happens here. The price finally moved higher, then came down again. First of all, a trend is higher highs and higher lows. It never moves up in just one straight line, okay? It's just like a snake. It just moves up, down, just like, by the way, do you know how a drunken snake moves? Straight, okay? Small joke, bad one maybe. Anyway, so what we're seeing here is a stock moving higher, retesting what was, we call it retest point. It retests what was earlier the resistance area, and the price continue higher because it would usually continue with the trend. This is the trend. The trend started here, okay? Now we're moving higher, a bit lower, and moving higher again. Why does that happen? Again, start thinking about crowd psychology. Let's do it that way. Let's say you wanted to go long over here. Does that make sense? Yes, it does make sense. You want to buy over the resistance area. You don't want to buy before the resistance area breaks. You want to buy over the breakout. You want to buy it over here. Let's assume you wanted to buy here. Let's assume you bought 200 shares and you expect the price to continue higher, and it finally did. Once it continued higher, how do you feel about yourself? Are you happy or sad? What do you think? Happy or sad? You're happy, Nicholas. You're happy, Greg. Honey's happy too. Good point, Taro. A good point is that, let me tell you this. One thing you need to remember, nobody's ever happy in the market. Also myself, I would finish a day up $4,000. I'm not happy. I mean, that happened to me on Friday. I was up $4,800. Was I happy? I was so sad. You can't believe how sad I was. I missed my first trade. Tiva moved lower. I could have had an 80-cent partial, because it moved down in 80 cents in just like, I don't know, 10 seconds. And I missed it because I was looking to the wrong way for like 5 seconds, and I missed a $3,000 trade. That was it for me. And I finished my day almost $5,000 up, and I was so sad. You know, I'm saying this, not that I really was very sad, okay? But what I'm trying to say here is that you're never that happy. You took 200 shares, it moved up. Then you actually say for yourself, oh my God, I knew it's going to go up. I knew this was a perfect formation. I knew I should have traded it. Meir just took it in the room. I took it with him. Yes, I did. But why did I only take 200 shares? I could have bought 1,000. I could have bought 400. Whatever. Why 200 shares? Why was I was such a chicken? Okay, so you're a little bit angry at yourself. At this price over here, somewhere over there, would you buy more? What do you say? Yes, no? Would you buy more over here? You wouldn't, no? Why not? I mean, it's uptrending. You don't know that it's going to come down and continue higher. Think maybe it's going to... You wait for a pullback. Okay, so yes, I agree. For a change. For a change, I agree. Now, this is really quite a simple crowd psychology. You missed your entry point over here, or you bought, but you didn't take the right quantity. You believe you didn't take the right quantity, and the price continued moving higher. Now, at that point over here, I'm not going to spend more money over here because it's too much now. It's too expensive. I'm not going to buy it at a too expensive price. By the way, that's not just in the stock market. That works in every other aspect of life too. Okay? You could have bought the house. Nicholas, you live here in Berlin, right? I do too. So the prices are going high like crazy, right? So you look at a house, at apartment 3 years ago, and you say to yourself, I could have bought this one for 150,000 euro. I could have bought it for 150,000 euro. Next year it's 200,000. And you say to yourself, oh my God, I'm not going to buy it at 200,000. I missed it at 150. But then you think, okay, but is it really going to maybe continue moving to 300? Should I really buy it at 200? And you feel so stupid because you really didn't buy it at the right price. And then you say, I could have bought it at 150. Now it's at 200, but I'm not going to buy it at 200. I'm going to wait for the price to move down a little bit. You really have a dilemma. Absolutely. You have a big dilemma. Most of the time, people would just rent the house and say, well, I'll just wait for the prices to go down because I'm so stupid. I could have bought it at a lower price and so on. Now, what did happen? Look at that. You're not going to add another 200 shares here. But what did actually happen? The price came down to this point. At this point, well, you will consider buying another 200 shares here. Maybe more. You will consider buying another 200 shares here. Maybe yes, maybe no. Some of you guys will buy here 200 shares. So some of the guys who bought here at the breakout would in fact buy another 200 shares. And guys, this is just psychology, okay? This is just psychology. Not everybody's going to buy. Some of them are going to buy. But those people who bought here are likely to add. Some of them are likely to add here. Would they sell? Absolutely not. They're just buyers. They're just buyers. They would wait for the price to continue higher. Sometimes they're right, sometimes they're wrong, but definitely not going to sell. They won't even sell if the price goes down. People don't usually sell stocks when the price goes down unless it crashes, and that's another issue altogether. So we just discussed one group of people, the one who bought. What about the guys who were with me in the trading room, used the wrong, limit order with 2 cents, missed this entry, didn't take the trade, and see the price moves up without them. So you're watching the price and you're seeing the price move out. Oh my God, this guy now, Meir, is making so much money. Why didn't I join him? Why did I join? Would I join him here after it already moved up? I don't need to ask you. The answer is very simple. Same psychology. No, you wouldn't. You're just going to watch it and you say, oh my God, I should have participated. You didn't participate. When it comes down, some of the people would in fact buy something over here because it came back to the same entry. So we just discussed the people who bought. We just discussed the people who didn't buy. And we're going to discuss right now the short sellers. Now, there are always short sellers who anticipate that when you have resistance, it's going to come down. They saw this resistance over here. They may have shorted and make money. Okay, they saw another resistance over here. They may have shorted and make money. They saw the price comes here. They short it. They expect to make money in the channel, okay? But to their surprise, the price just moved up. some of them will have a stop, some of them will not have a stop. The guys who shorted it and the price moves up to here, would they close their shorts over here? No, because people don't really like to take charge of their mistakes. Usually people don't do that. But because the price is much higher right now and they're going to lose a lot of money, and maybe they're even going to double down on their positions. Anyway, they're not going to stop it. Well, many of them won't. Some of them will, most of them won't. So if the price comes down to back to the place where they shorted earlier, would they close their position, meaning buy? Very likely, at least some of them. Okay, so again, the short sellers are the ones who are buying over here, and it is very likely for the price therefore to continue out. So in fact, what I'm saying here, what was earlier a resistance now becomes support, because most of the market participants, not all of them, but most of them, would in fact come to this point and in fact buy, anticipating that at this price they could buy at a lower price and therefore create a support. And if it is being supported right over here, then there's a very good chance it's going to continue higher. Now again, what we did here really is just explaining the basic parts of what the crowd psychology means for stocks that are trading lower, just whatever. It's very, very simple. It's very, very clear. And you know what? I want to show you an example. Yeah, that could be good. I don't have to really look for a long time for an example, guys. I don't really have to look for a long time. You just click almost every stock that you're going to click, you're going to find the same thing. Watch TRGP. Do you see this area of resistance right over here? A very clear area of resistance, right? So it finally went through. Now what happens? Come back, retest this area, and again, it's an area. It went down a little bit, okay? Retest this area and continues higher. Another resistance right over there. Moves higher, retest and retains higher. I can find you several things that look like that. And again, they don't really need to look perfect. Here's a stock I was trading short while ago. And in fact, it's in my picks for this week short under 70, I believe it is. Yeah, Footlocker, why not? Look at this resistance area over here. You see the resistance area over here? Very clear resistance area. And once it goes through the resistance area, look at the retest. It just retests the resistance, which is now a support, and it continues higher. And it continues higher. Now watch this resistance area over here. It moved higher, it moved down. It was supported here for 3 days and then broke down. So it's not always that support is going to hold it, but what was resistance becomes support. What was resistance becomes support. So again, you can find almost every stock that you're going to take a look at, you will find the same thing. Breaking resistance, retesting the resistance line, and continues higher. Yes, you can buy. By the way, you've seen me do that in the trading room. Not too many times, but you did see me doing that in the trading room several times. If you were with me. Not, by the way, not in the first few minutes. It's usually a trade I would take an hour later or something like that, but you would certainly see me doing things like that in the trading room. Now, if I want to, now, by the way, the same, just excuse me for not getting into the psychology, but the same applies here. When you have a stock coming down to a support area, breaking down the support, who in fact are the sellers here? The disappointed short sellers, the one who shorted it but didn't like enough quantity, the one who didn't short it and won't like to short it right near. And the same story applies, just the other side, okay? So it's just moving down, the same thing. When you break a support, it is very likely to turn into a resistance, very likely to turn into a resistance. Now again, if you take a look at this example, which is, by the way, very similar to what I just showed you with FL, a nice resistance line was supported here. Once it moved higher, was supported back here, and then continued higher. And the same applies here, and maybe here, and so on and so on. So using support and resistance is very, very important because you need to use support and resistance in order to make decisions. Either they are decisions that you make them on intraday. For example, if you want to go, intraday or daily. If you, this case it's daily what I'm showing you, but the same applies for intraday. If you want to go long FL, for example, wait for the resistance to be broken here, go long. Again, if you want to have a stop loss, then at this time, when you went in here, your stop loss should be somewhere around here, okay? Because as you can see, this is support area. The recent support area was right over here. You can also take a look at the less as good as that support area over there. And if you take a look at your targets, then you should also look for resistance. How can you find resistance? Just go back. Maybe there is, maybe there isn't. By the way, I don't know. There isn't. I think it's all-time highs for Foot Locker. Yeah, it is. Oh my God. How this one's moving up. So it's all-time highs. If you look back, there's no resistance. No previous disappointed buyers. You remember what we discussed earlier? No previous disappointed buyers. Nobody here. So when a stock like FL is moving higher, it moves into a vacuum. As long as it moves to new highs, which it didn't recently. Now it's moved down, moving back up, but all of these new highs over here are just really a vacuum because there aren't any disappointed buyers from previous times. There are previous disappointed buyers here. By the way, if you take a good look, you will see what happened here. You see, as the more time Foot Locker spends around this area, there are more sellers and more buyers because over every seller you find a buyer, right? For every seller you find a buyer. And for every seller you find a buyer, once it starts moving higher, it will have some kind of resistance here. Look at how many days it took it to move over this area over there. You see, this area was finally broken recently, but there was a resistance area right over here. There was, and all of these people here who you could call them disappointed buyer once it moved down are the ones who are selling at these areas. Again, watch this area over here. This is the area where they would start selling, and once it moves higher, it's going to move higher. But then again, you would find some disappointed buyers from here waiting. But the difference between these disappointed buyers who are now selling here, they are selling, don't make mistake thinking they're not, they are selling over here, but there's less because it only spent shorter time in this area than this area over here. Here it spent a lot of time. You can also count in these guys from over here and from here and from here and from here. So the longer it spends in this area, the bigger the resistance is going to be over here as it tries to move higher. Once it starts moving into new highs, then it has no previous resistance. Now, so you use for long positions, use it as a breakout over the resistance. For short positions, you want to short it under the support. For long positions, you want to use your stop below the recent support level. For short positions, you want to use your stop above the resistance area. For long position target, you look for the next resistance. In the case of Foot Locker, we couldn't find any if it moves to new highs. For short positions, you look for the next support level if it exists, because again, if the stock just was at 100 for years and is now moving down, then what happened 10 years ago, I don't know if anybody cares, okay? But you need to watch it. And again, support and resistance are levels or areas. They're areas, not really lines, okay? It's very important to understand that. So just to wrap things up, we're going to talk a little bit about breakout ideas. We just mentioned that. But the trading ideas are again based on support and resistance. Almost all of my trades are based on support and resistance. You will see me doing that a lot in the trading room. And the trading idea again is based on that. trading idea will be visible on the daily chart, and if you see it on the daily chart, then it is perfect. Now, assuming I want to go long Footlocker, and I see a combination of going long, and again, let's take a look at here. Let's say I can see a nice, here it was, a nice daily. Oh no, we're at the weekly, sorry. So I see a nice daily breakout over here. So first I take a look at that and I see a nice daily breakout over this resistance area over here. Then I move to the intraday and I want to see the same. So if I can see a trade idea that is based both on the daily and on the intraday formation, I love it. I would give it the higher rank, meaning maybe instead of buying 400 shares, maybe I'll buy 600 shares because both of them now come together. If I can see a resistance, buying over resistance, both on the intraday and both on the daily, and of course we mentioned yesterday that the market should be moving higher, and so on and so on. Therefore, you have the perfect formation. So trading ideas are your research and preparation for the next trading day. Yes, you need to prepare for the next trading day. You can prepare 10 minutes before, or you can prepare after the last trading day. Do not enter a trade without having a clear trading idea, meaning you need to watch the next level of resistance or support if you're long or short and so on. Just base your trading idea on what you see. This is certainly one good looking formation over here. As you can see, it's a very, very nice resistance area over there, which was finally broken and moved higher. So another trade idea could be what you're seeing here, a stock that is uptrending, and as you can see, there's a very, very clear resistance area over here. One more thing that is very, very good for you to watch in this case is what? Can you tell me? What do I like about this formation over here? Other than that it is a very, very clear resistance area and it looks like it may just move, which it did, by the way, move higher nicely over that. Yes, we should watch the volume. We should watch the volume, but we'll have another, we'll talk about that in another lesson, by the way. You're right, we should watch the volume, because when the volume is moving down, you want to see it declines here. When the price is moving down, you want to see decline of the volume here. Price moving higher, you want to see the volume moving higher. And of course, at the breakout day, you want to see the volume very strong. Okay. There's one more thing. Convergence. No previous resistance. Compressing. Right. Everything's true. Now what I can see over here, is in fact that there is an uptrend. It's a combination of an uptrend and a resistance area. So as you can see, the buyers in fact are getting more and more aggressive. Here they let the price fall up to this price, down to this price. Here they became more aggressive and they started buying at this price. Here they even became more aggressive and they started buying at this price. So what I'm seeing really is a sort of an uptrend. If I watch the lower highs, okay, the higher lows, I can't see higher highs because there is a resistance. I want to buy over the resistance area, nice higher lows, which means the buyers are getting more and more aggressive, and that is in fact great. Okay, that is something I like to see. Now the same thing applies for breakdowns. You short a breakdown right under you short something that is right under a support. When support is broken, you want to short it. And again, the longer the support is going to be formatted, like over here, the bigger the breakdown is going to be. Therefore, again, if you find something that looks as nice as that, by the way, this is a good example of a very nice breakdown formation. Don't really expect to find many of these, right? Really, seriously, don't expect to find many of these. Even if you have just that is enough, okay? That from here to here, that's a nice breakdown formation. You add that, It's a perfectly nice the breakdown formation. You add that, oh my god, it looks like something I just need to join. Okay, so maybe I'll even double my size when I take this trade. But that's a nice breakdown formation, and you would really like to see that happens. By the way, as you can see here, there's no issue about sellers becoming more and more aggressive, exactly the opposite. But you can also say, well, something goes wrong, it tried to move higher, it miserably failed, moved all the way down to the support area. It's a very nice support area. Let's short it under support area, and so on and so on. So there are many reasons why I would like to trade this one. We're done. Just a summary. The technical analysis is a study of the price movement in the stock or other assets in order to identify price trends. To confirm an uptrend, you need two or more consecutive higher highs and higher lows. To confirm a downtrend, you need two or more consecutive lower lows and lower highs. And support happens when the price falls below the specific level. Support happens when the price fails to go below the specific level. And of course, resistance can be due to long players considering closing out positions. Break up is where the stock breaks out of its resistance area, and that's about it. So you got a nice quote of the day, and I thank you for being here. And if you have any more questions, that should probably, if you're not tired enough, that should probably be the time to ask them. Any question, guys? What I would like you, in fact, to take home with you is the fact that we're not really trading technical analysis just like in the textbook. Again, we're not just trading support levels, reversal, which we will discuss in the next lesson. We're not trading breakouts. We are trading people. We are trading the psychology of people. We are anticipating the next move based on knowledge. We are anticipating the next move based on what we think the majority is going to do, that is the institutional traders, and what the 20% of the people, the other people are going to do, which are the investors, swing traders, or whatever. We are anticipating. By the way, even though we may give more weight to the institutional traders, which are of course 80%. In some instances, and this is very important for you to understand, in some instances, it is the 20% that dictates. It is the 20% that dictates what is about to happen. It usually happens in stocks that are like very crowd friendly. Sometimes it could happen, for example, with a stock like Tesla. Why? Everybody loves it. A pharmaceutical company. Why? Everybody loves it. Some very sexy company like Fitbit. FIT was traded at very high prices and then crashed down. Why? Because everybody liked the product and so on and so on, but institutional traders really did really understand that they don't really need to buy this company because it's really not going anywhere, just one product, whatever. Who really buys that company? So you didn't see a lot of institutional investors buying it, so the crowd pushed it higher. So sometimes the 20% are giving the tone. So we need to understand what's going on. Certainly in the stock that I'm trading, when you see my gap trading technique, when I'm trading a stock moving down, who's the one who's selling? Is it the institutional traders who are selling? No, they're not involved in stock that is down 15% or something like that. It's the crowd, it's the people, it's the fear, it's what's happening to those people who think it should go up and now failed, who doubled down, who did this and did that. It is more important for me, for you, to understand what is behind what you're seeing and to act accordingly. Once you understand that, you really get to the point where you see the matrix. At the point where you see the matrix, this is where you really have the understanding of the stock that you're trading and the market. And you're never going to be 100% right. But if you're going to go over 60%, you can make a living. If I will give you 60% on the roulette table in Las Vegas, last question, who would move to Vegas? Some of you? Anybody? 60% on the roulette. Honey, you would? Um, of current topic that I've been wondering, do you know how much intraday volume is driving the market just from data? Oh, Pinchas, the number is almost zero compared to what is going on. Almost zero. The part of the day traders in the market, you know what? I don't even know the number. I could possibly make some kind of calculation. You know what? I can't even make calculation. The number of traders compared to investors and so on, of course, not even. By the way, we are a small part of the 20%, right? We are not institutions. We are the small part of the 20%. What's smart of the 20%? I'll be surprised if we are over 0.5% of the 20%, not of the total. You know what? I don't know. But really, we are so nothing in the market. I mean, we don't constitute for anything. We do drive the stocks higher or lower. Sometimes we do drive the stocks higher or lower throughout the day when we are buying or selling. Okay, you know what? I'll finish this day with a short story of something that happened to me once. I don't think I ever told you this story, but if you have just 2 minutes, I'm going to tell you a story. I live in Israel, and I'm on the television all the time, like a market analyst, stuff like that, whatever. So people know me, okay? A sort of a local celebrity. And there were times where I was discussing my stock picks on television, buy this, short that. Actually, I didn't never say short because nobody understands short on television. It was more like go long here, go long there. And there was the leading financial newspaper, which was quite a big newspaper, the leading one, really. Once I get it every day. So end of the week, end of the week, walk out to the porch, take the newspaper with me, open up the main 2 pages of the newspaper, and all over the newspaper, they say this guy Meir Barak is giving up stock information at Channel 10, and is actually moving the Nasdaq. I'm reading this and I'm saying to myself, seriously, how stupid could this idiot be for writing this foolish thing about myself? I mean, the reporter, he came to an idea that I'm the person who really is moving the market based on my picks, whatever it is, on Channel 10. Okay? So, by the way, I wouldn't mind having this article every day. I don't care. If somebody thinks I'm moving the market and want to write it on the double spread of the main financial newspaper, go ahead, do that every day. Really, it's so foolish, but if people read that, in this case, bad news is good news. Because somebody who has the sense of understanding what's going on in the market would absolutely understand what's going on there. So really, seriously, I'm doing that? Okay. Next move. The problem is that there's a regulator for the television, and the regulator, which understands nothing about stock trading. Now, the regulator, their only job is to listen to television broadcast and to make sure that you're not using like foul languages, like saying fuck, doing that. And advertisement. You can use advertising, but not to extend, not over and extended of this or that. Different rules in different countries. In my country, this is one of the job of the regulators. So the regulator calls up Channel 10 the next day and say, is it true that this guy is really moving the market? Now the problem was Channel 10 understand nothing about stock trading too, so they were very much afraid of the regulator. And as it happens, for the next 1 year, I wasn't on television. That was, I think, it was in 2009. So I didn't see cameras for a year because of this foolish thing. Well, that was a stupid thing. But do we really move the market? No, really, we don't move the market. We don't really move the market. Okay, guys, thank you for being here with me, and hope you had fun. And again, you know what? I will say that again. I'm a little bit sorry I'm getting into these details, but it really is important for me, for you, to understand the market, not trade the rule of the market, but to understand the market. Have a great day, and you have a lesson tomorrow with Danny. He will continue the technical analysis part and get more into details about reversal and things like that. And hopefully everything is going to interconnect together. So it is getting close to midnight over here. Don't know what is your time, depending on where you are in the world, of course. But I guess it's getting late too, wherever you are. 22:40, honey? Where are you at? 22:40, then you gotta be in the UK. London. Okay. Hyro, 23:42. Where are you? Tunisia. المغرب. بيحكي عربي؟ شوي. Okay. See you guys tomorrow in the trading room. And tomorrow at the same time, yeah. And of course, I'll be teaching you the day afterwards. See you. Have a good night. Traders, if you would like to learn trading, you can join my online trading room, trade live with me, and even mirror my trades. It is a 14-day free trial. You can sign up now. If you don't have a trading account, you can open a Colmex account and get free access to my trading room. Thank you very much for watching.